Yeah, so I formally welcome you all. So I think I'm live on YouTube as well. So just confirm me. Anyone can confirm me that my voice and the video quality is absolutely fine in the YouTube as well. Anyone can confirm me that all clear. Nisar is saying all clear in the YouTube as well now, and in the Zoom everything is good to go. We have already confirmed that. Okay, everything is good. Chalo, that's nice. Okay, so welcome to EduTap. So today we are going to have the first class of the phase 2 live crash course. Yeah, Priyanka, don't worry, we are going to talk about that as well, about the webinar. So first of all, I'm going to give you the orientation about the phase 2 classes. Then we are going to move ahead with the first class, right? So let me share my screen with all of you. And before that, we are going to talk about some phase 1 analysis as well. Don't worry, I'm going to ask how many questions you have done correctly in the phase 1 as well. Don't worry about that. Okay. So now everyone can see my screen. Yes. Just confirm in the chat section. Yes. Yeah. Okay. So how we are going to move ahead with our phase 2 classes? Let's understand first of all that. Then we are going to move to the main content. Okay. Chalo. So what's going to be the pattern of these phase 2 live classes? First of all, understand that. Okay. Okay. Before that, let me ask you how many questions in the paper 1 you have done correctly? In the paper 1, how many questions you have done correctly in the phase 1 of the SEBI? Just let me know in the chat section, everyone. Okay. Out of 80, how many questions you have done correctly? Everyone, I want answer from everyone. Rajneet is saying 37. That's it. My voice is clear now. Okay. Amitesh is saying 34. Okay. Cool. 31, 35. So everyone is okay. 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 That's cool. Yeah. See, I'll give you a scenario in which you can basically analyze key. You are going to good evening, everyone. From the YouTube as well, I am saying good evening, right? Okay. I'm looking at both of the platforms. Huh? Don't worry. Okay. Okay. Chalo. So most of you have done the questions of around 35 or 30, 27 maybe. I'll give you a scenario in which you can be basically satisfied ki you're going to crack this phase 1, paper 1 basically. See, even if you have done correctly, see, there are 80 questions. There were 80 questions, right? So one question is going to carry 1.25 marks, was carrying 1.25 marks. So even if you have done correctly 25 question, right? 25 multiplied by 1.25, it is going to fetch you 31.25 marks. And even if you have done incorrect, even if you have done 2 incorrect questions, then also when you minus that from this thing, then also you are above the 30. So you just need to have 24 question correct and 2 question incorrect, right? To sail through paper 1. So don't worry about paper 1 if you have done right. If you have, suppose I'll give you one more scenario. If you have correctly done, if you have total attempted 35 questions, out of which you have done correctly 27 questions, let's say, and you have done incorrectly 8 questions you have done incorrectly, then also you are qualified for the paper 1. Just do the calculation from your end. 27 multiplied by 1.25, then you will deduct 8 multiplied by 0.3 something, because 1.25 divided by 4 would be 0.3 something, right? So you will sail through it provided you have done 25 to 30 question correctly and less question incorrectly, right? So you have got the idea. And also I'm getting the messages key I have done 31 and like that, right? Okay. So the ghost is saying ki 46 correctly, 46 attempted, 15 incorrect. So I think you are selling it 1.25 divided by 4 is 0.31, and you have done 15 question incorrect. So your negative marking would be 4.6. Yeah. And you have done 31 question correctly. So you are selling it, right? So 38.75 minus 5, you are sailing through paper 1. Okay, let's now talk about enough of the discussion of the paper 1, right? Now let's move ahead with the dates of the paper 2 online examination that is going to be held on 31st of August. Now, how many days approximately you are going to have? 30 days. And what is going to be the most appropriate method to deal with the paper 2 or the phase 2, in fact, right? So we are going to first of all discuss the strategy part, ki what we are going to do in the phase 2 live classes, and how we are going to move ahead, right? So that the efficiency is maximum as well as the effectiveness is maximum as well, right? Okay, let's talk about that. So we are going to move ahead with the strategy of triple R. Now, what is this triple R? Listen to me very carefully. I had the webinar as well at 2 p.m. and that also I talked about this. But let me give you brief about that, because you are in the course and few people are watching it in the YouTube as well. So let me give you a brief about the course, how we are going to move ahead with this live classes of phase 2 in our course, in the EduTap course, right? In the EduTap course. So this triple R is basically, let's talk about the first R first of all. This triple R is revise, retain, and reinforce. Right. First of all, let's understand the revise component and how we are going to incorporate this in our course in the live classes of the phase 2. Right. First thing is revision. How you're going to revise, how you're going to revise with us all the components. You're going to revise everything by practicing MCQs. Now, thing is, the focus of our classes will be on MCQs, because you have already covered most of your syllabus or all the syllabus in the phase 1 classes, right? Now it's time to apply those concepts and theories to actual questions, because in the examination you're going to find out the MCQs in the SEBI, right? So you need to know how the knowledge is going to apply to the questions. That's what you need to understand, and for that you need to practice more and more MCQs. So what we are going to do, we are going to revise by practicing MCQs with the underlying concept. So we are not going to look at only the question and answers. We are going to look at the detailed solution of each and every question. And we are going to eliminate the option as well, so that you have the understanding of all the underlying concept for that particular chapter. Is it clear? Right? But the question, oh, who has annotated in my PPT? Who has done that? Okay, let me just disable the annotation. And let me share my screen with you one more time, because someone has done, I think by mistake, someone has annotated in my PPT. Let me just reopen it. Wait for a minute. Yeah. Orientation. Yeah. Okay. Now I have disabled the annotation now. Now no one can annotate in my PPT, right? Okay. Chalo. So where we were? We were on to this thing, right? So yes, so we are going to have the MCQs and we are going to talk about the underlying concept in the MCQs, right? But why through MCQs? The first point is because it is going to give you the application part of the theory, and in the examination you will find the MCQs. So you should understand how to apply the knowledge or how to apply the theory. For that, practice of MCQs are must. And these 30 days that you are going to have with yourself, you have to maximize the output in these 30 days. So we are going to practice lots and lots of MCQs, right? In these 30 days. Now, second reason is that it's called learning by doing. Why we are doing it like that? Don't worry, even if you haven't covered anything yet, or even if you have covered 50% of it or 80% of the syllabus, then also rest of the things will be covered through these MCQs and through one more thing. I will talk about that. Don't worry. The thing is, it's called learning by doing. How it is going to help you, first of all, understand. See, when you try to attempt a question in the form of MCQ, you try to first think, right? Then you pick the answer. And in that process, you are thinking about the answer. You are trying to connect the question to the underlying concept. That will be beneficial for you. Second thing is that if suppose you have got the answer incorrect while we are doing the practice live, if you have done the answer incorrect, then you will try to find out the reason why you have ticked it incorrectly when we will be discussing the underlying concept of that question. Now it will sit in your mind, it will be retained in your mind for the longer duration of time. That's the use of MCQs. So you try to understand the underlying concept again, and it helps in what? It helps in retention of the concept. Are you able to connect with me or not? The usage of MCQs. right? Whenever you try to think the answer, you are trying to connect the question with the underlying concept. That gives you the extra retention power of that underlying concept, because when we are going to discuss the explanation part, you will think, okay, that's the reason I have ticked it incorrectly. So that is going to give you the extra power to retain the concept, right? Clear? Now, okay, everyone is saying yes, that's cool. Acha, now, see, understand. So it is going to help you in retention of the concept. So here we are coming up with the second R. What is that now? That is retention. So through the MCQs, you are retaining the concepts in a better way, but we are going to practice first set of MCQs by analyzing it properly, by going through the underlying concept as well. But then we have the second R, that is retention. Now what we are going to do at the end of the class or at the middle of the class, what we are going to do, we are going to provide you with a quick revision notes. You can call them mind maps, you can call them crisp notes. What are these now? See, these are the notes which is going to be very convenient for you to revise all the concept very quickly. So whatever classes we have done in the phase one, right? All the classes, what we have done in the phase one, each class consists of at least 82 or 60 to 100 slide in each class. So it is not very feasible to revise the 60 to 100 slide in one go each and every time when you want to revise it. So you need a crisp note, or if you have made the handwritten notes, that is very good. But if you haven't done that yet, we are going to provide you crisp note for that as well, right? Let me show you the crisp note for commerce and accountancy for the first chapter, or you can say for the second chapter, that is accounting principles. What do we mean by this crisp notes? That is going to help you out in revising quickly all the concept in less number of slides and through graphical representations. Let's talk about that. Okay, let me just give you the example through this. Through this commerce and accountancy accounting principles, and for the costing, I'm going to show you quick revision notes for the marginal costing, right? So these are the accounting principle in quick manner, how you can revise it. So we have got the notes for you. What we have done here, see, accounting principles is a theory base of accounting. That's a complete chapter. But what we have done, we have just compiled it in such a way, we have made the crisp note that these accounting principles are going to be covered within 5 slides. So this is third slide, this is fourth, this is fifth. That's it. Chapter is over. So these are called crisp notes, or you can call them mind maps and whatever you can call them, right? So through the help of these short notes, you can quickly revise it because it is visually appealing, right? So now these concepts you can revise. Suppose we have the entity concept. So just 1, 2 sentence or 3 sentence are written here. Just by reading through this sentence, you are going to have the revision of what you have done in the phase one. And for those people who are new to the phase two, I hope those who have just purchased this phase two course only, I hope you are well aware with the concept, underlying concept, the basic part of the accountancy and all the subjects. But even if you are not, don't worry about that, because in this retain portion, we are going to revise everything in a very efficient manner. Plus, please understand, whoever is going to buy the only phase two course, suppose we have right now so many candidates here, but suppose we got some candidates who have just purchased the phase two course. They are not enrolled in the phase one live classes. So what we are providing you, we are also providing you with the phase one classes as well. The live classes that we took, we are also providing you the recording of phase one classes. So if you want to get into the detail of any chapter, you can watch those classes as well. Don't worry about that. We are going to, you have you have those classes in the recorded format, so you can watch it. If you want to get into the detailed part of each and every chapter, you're going to get that as well. But most of the time, you're not going to need that, because these crisp revision we are going to do, and from that only, and by practicing all the questions, all the MCQs, and by discussing the underlying concept of those MCQs, you will be having the good hold of the concepts. So, but if necessary, we are providing you that as well, the detailed lectures of the live classes of the phase one that we did, right? Now, this was the example for the accounting principle, how we are going to provide you crisp RRR or triple R, revise, retaining, and reinforcement method, right? Now, Similarly, for the marginal costing. So marginal costing is a complete chapter, is a big chapter, but how you're going to revise it in a quick manner through the graphic representation, that is going to help you in revising quickly all the concept through the visual means. So here, this is meaning of terms has been discussed here in one slide, and as well as the characteristic of marginal costing in one particular slide. All these things are discussed. And then you have the pro forma here. See, you can directly revise the pro forma from this slide itself. You don't have to go through all the lecture, the previous lecture slide, or all the book what you used to refer, right? You don't have to refer all these books. So you can revise it quickly from here. Though if you want to revise from summary sheets, that is totally your wish. But we are also providing you crisp notes so that you can revise it quickly, right? Okay, Raj is saying, wow, nice. Thank you, Raj. Okay. So this is how you are going to revise it in the commerce and accountancy, in the costing, and as well as in the companies that in other subjects as well, you will have the triple R. Don't worry about that, right? Now, see, we have all the formulas in the marginal costing at one place so that when you do the question, you can quickly revise it from this slide itself. From these two slides, you will find all the formulas here. So you can revise it quickly from two slides and you can apply it actually in the MCQ, whatever MCQs are going to do. You can apply these things. So this will help you in revising the concept in a quick manner. Got it? Okay. Now, understand. We have talked about the second R, that is retention. The ghost is saying we have made a notes. That's really nice. If you have made your notes, then you can complement. And he's also saying this as well. That's really good. He's saying we will complement them with these notes. That's really good. If you have made your notes, just whatever extra you are finding it here, you can write it in your notebook. That's really good, right? And whatever MCQs we are going to discuss in the live classes, whatever extra information you are going to get through the explanation, that also you can add it in this crisp notes. Got it? Got the logic how we are going to proceed ahead. So revision is done, retention is done through the through revision of crisp notes. Now, what about this third R, that is reinforce? What we are going to do in this reinforcement part? Reinforcement means what? Making the concept stronger. And how we are going to do that? Again, after first set of MCQs, you have evaluated yourself ki how much strong you are in a particular subject, in a particular chapter, sorry, how much strong you are. Then we will have a brief discussion or brief revision from the crisp notes about all the underlying concept for that particular chapter. Again, we will have second set of MCQs so that you can reinforce that whatever concepts we have discussed in the first set of the MCQs in the explanation part, plus in the in the second R, whatever we have done in the retention part, whatever crisp notes we have revised, you are going to reinforce all these concepts to the second set of MCQs in a particular class itself. So first set of MCQ, then crisp notes, then again reinforcement of these concepts through next set of MCQs. Got the clarity how we are going to move ahead with all these classes? हाँ, सभी सब्जेक्ट में होगा शैलेंद्र. We have done that in the costing for the batch 2, but we are now going to include that in all the subjects, right? So everything will be discussed through the MCQs and plus this revision crisp note of that's called revision retention, right? We will do that, the quick revision in all the subjects, right? Okay. Now you got 30 days now. From right now, you have 30 days. Okay, let me check the YouTube as well, right? Yeah. Okay. Yeah. Okay. Chalo. Now let's move ahead. So we were discussing that you have approximately 30 days, right, from now on to get your to give your phase 2 examination. So what we are going to have, 13 classes for commerce and accountancy. For the management, we are going to have 9 classes, and for finance, we are going to have 10 classes, and for economics, we are going to have 10 classes. For costing, 9, companies act 7, descriptive English 7. So overall, you will get 64 classes. So, and each day you will have 2 classes. In each day, you will have 2 classes, right? And the third slot that you are going to do self-study. So whatever we have discussed in the live classes, you are going to revise it. Or what you can do, whatever is going to be the next class, you can watch the recorded lectures of the next class before coming to the class. That is also you can do in the third slot that you will utilize for the self-study. Okay? Okay, got the understanding how we are going to move ahead. Now, these are the topics that is also given in the you got a schedule, right? Detailed schedule in the website, so you can check it out from that as well. So this is going to be our schedule, and this is how we are going to cover all the classes. So this is the phase 2 live crash course. So even the students who are going to have the students who have not purchased the phase 1, but they are only going to purchase the phase 2 live crash course, don't worry, you are going to get the recording of all the phase 1 classes as well to get the whole of the concept. Plus these MCQ video lessons you are going to get, plus the crisp revision as well. Don't worry about that, right? Now, let me just give you the scenario of the website, how you're going to get to the website and how you're going to check the detailed schedule as well. So from the courses you are going to have in the SEBI Grade A courses, just click on that and you will find these live classes here, live crash course for the phase 2. Just click on the brochure and you will have the detailed schedule day wise, right? You can check out the detailed schedule with the timing. So be on time, and we are going to have the classes on time, right? All the classes. Now let's discuss the today's class. We are going to have the class of orientation plus introduction to accounting, theory based accounting. So we have discussed about the orientation in a very good manner. Acha, one more thing I want to tell you. If you are purchasing the course, so just apply the coupon code of SEBI 77. So I think if you apply this 77 code, you will have the flat 77% discount on this 13,000 rupees. So I think it will be around from 2,500 to 3,000 only. So you will get the live crash course of the SEBI Grade A 2024 at a very affordable price, that is from 2,500 to 3,000 price, right? So you can do that. Please do apply the coupon code, because if you don't apply this, it will be costly for you, right? Okay. So it will, after applying the coupon code, it is only going to cost you 2,500 to 3,000 only, right? Flat 77% off. Okay. Let's move ahead. Sharon is saying 77 thala for a reason. Yeah, exactly. Thala for a reason. Okay. Let's move ahead with the today's class. Okay, I'm going to close this PPT now. So yes, so we have now today we are going to discuss what? Let's discuss the content part now. Enough of the orientation. You have all got the idea how we are going to move ahead with with our classes in this live crash course, right? Okay. Ghost is saying, kindly address my question as I'm confusion. How should I manage the RBI grade B along with it? Okay. Ghost, please attend the webinar. Today I had the webinar. You didn't attend it, right? Okay. Okay. So just call us. Just call on the number that I'm going to provide it to you. Just call on that number. Then we will solve your query, right? Because it's a very good question. So we need to have this uh, uh, not a brief discussion, but the lengthy discussion we need to have for this. This is a very good question, right? Okay. You are going to call the support team and then they are going to answer you, right? Okay. Dhaval is saying, sir, triple R सारे subject में होगा? Yes. We are going to have the MCQ in all the subjects, right? Okay. And we are going to have the revision in all the subjects, the crisp revision in all the subjects, right? Chalo, let's move ahead with the first question. So now you know what you need to do. You need to focus on the MCQ with the underlying concept, and also you need to try to give me the answer of all these questions. Then we will talk about the detail of these questions, underlying concept of these questions. Then we will also have the crisp revision. Then again, second set of MCQs. Clear, everyone? Are you ready? Okay, let's move ahead with the first question of the day. And I have already started to get the answers for the first question. Okay, so this is the first class. So obviously you will all find this class easy because it's about the theory base of accounting, but don't be too much overconfident, right? As we will be moving to our next classes, the level is going to increase. right? In the financial statement of company accounts, in the ratio analysis, in the cash flow, in the fund flow, in the accounting standards, we will have the numericals as well. But today, we are only having the discussion of theory base of accounting and the introduction to accounting. So it will be an easy class, right? For you, I think, if you have cleared the phase one. Okay. If you are confident of clearing the phase one. Okay. Question number one. A or an event is known as happening of consequences to a business organization, which consist of transaction and which are measurable in monetary terms. So let me know in the chat section what should be the answer here. I'm giving you 10 seconds. Dhaval, we are going to revise through MCQs plus the crisp revision as well in the middle of the class or at the end of the class through the crisp notes. Yes, I have started to get the answers. Sanjana, Harsha, Akhil, Bhakti, okay, Shailendra, Rashmi, everyone is correct. I'm not going to take out names because there are so many candidates here. Around 80 people are here, so I'm not going to take out 80 people name here. But yes, everyone is correct. And whoever is incorrect here, listen to me very carefully because we are going to discuss about the underlying concept as well. Okay. So an economic event is known as happening of consequences to a business organization. See, which consists of transaction. See, in the accounting process, what do we have as the first step? Identification of the economic event. But thing is, what is economic event? Economic event is any happening that is related with the business organization. That is related with the business organization. And this event consists of transactions and which are measurable in monetary terms. Only those items you are going to record in your financial accounts, right? So the correct answer would be economic events. And I can see most of you are correct, around 95% of you are correct. How, Mustafa, don't worry about that, right? So the economic events. So this is the very basic chapter. So I don't think you will have any problem here. So these are called economic events. Any happening that is going to be related with the business organization and which consists of, which includes your transaction and which you can measure in the monetary terms, right? So that is your economic events and everyone is correct about that. Option number B would be the correct answer. So here's the explanation. Let's read it out in a brief manner. So yes, all the events which can be measured in the money terms and we can identify it as the economic event and are going to be recorded. But some additional information, we are also going to talk about that. See, all the accounting information that you are going to make in the accounts book, that is going to be communicated to the parties, and the parties can have the internal users. Parties means users, right? Easy. Parties means users. So users can be internal and users can be external as well, right? Now, few additional information. If an event involves transaction between the outsider, so we are talking about the economic event now. First thing is economic event, but now this economic event can also be of type of external event and the internal event as well. What is this internal event and external event? Let's try to understand that. External event is any such event that is going to include your party within the organization and second party should be outside the organization. So these are called external events. There will be two parties. There will be at least two parties. So one party should be inside the organization. One party should be outside the organization. This is called external event. For example, sale of merchandise to the customer. So if you are a business and you are selling your shoes to the outside to the customers, so it is going to involve the external party as well, right? So it's called the external event. What do we have as the example in the case of internal event? Suppose you got stores department and you got this production department. So you are moving the goods from the stores department to the production department. So it's a internal event. Supply of raw materials or component by inventory or stores department to the manufacturing department. This manufacturing department is going to ask for the materials to produce some goods from the stores department, and the stores department are going to issue the materials to the production department, right? Store department is that department which stores the raw materials, but production department is the department which is going to actually use the raw material to manufacture goods, right? So if any event involves the parties which is inside the organization, so here the store department and the production department both are inside, the organization. So it will be called internal event. Any confusion? Anyone? Easy enough, right? Right? Okay. Let's move ahead. Second question. Everyone should be correct here. Which among the following statements are incorrect? Recording is the process of entering business transaction in the books of original entry. You have to tell me the incorrect option, huh? Just read out the option carefully. Communication involves communicating the financial statements to various users. Identifying involves analyzing and interpreting financial data. Measuring means quantification of business transaction into financial terms. So I'm giving you 10 seconds to answer this question. Just look at the options very carefully, then give me the answer. Take, you have got 10 seconds here. Till then, I check the chat section. Okay. Yes, everyone is correct. Not everyone. Not everyone. And whoever is incorrect, you have to listen to me very carefully while I'll explain the question, right? Okay, Akhil is asking union or internal or external member. This is included in the question. You are going to give me first the answer of this question, right? This is included in the question. Then you will understand this question. Okay, I've started to get the answers, and most of you are correct, but not all of you are correct. So let me check. Yeah, not everyone is correct. Few of you are incorrect as well, but don't worry. We are going to talk about each and every options as well, and we are going to eliminate the option. See, we have to identify the incorrect option. Now listen to me very carefully. Recording is the process of entering business transaction into the books of original entry. Yes, absolutely correct. Books of original entry is what? It is general book, right? Books of original entry is general book. So recording is the process of entering those transactions into the general book, right? Correct. Second option says communication involves communicating the financial statement to the various users. Absolutely correct. When you have the financial report, then you are going to convey these reports to the various users, either internal or external users, right? Third option says identifying. Identifying of the economic events involves what? Analyzing and interpretation of financial data? No, not at all. Identification involves your identification of economic events. You are going to identify what are the economic events that are going to get recorded in your accounts book. That includes your transaction which has the monetary impact, which you can measure in monetary terms. Those are only economic event. So identification involves this only, identification of economic events. It doesn't involve analyzing and interpretation of the financial data. No, you haven't still prepared your financial data, because first step is identification of economic event. Then you try to measure it, then you record it, then you communicate it. So still you haven't prepared any financial data. So how it is going to involve the analysis and interpretation of financial data, right? And don't worry, after 20 to 25 questions, we are going to have the brief discussion of all the topics, of all the underlying topics together with the help of crisp notes. Then we will be discussing second set of MCQs. In that, you all should be correct, because right now we are warming up, right? Okay, this is the first set of MCQs. Measuring means quantification of business transaction into financial terms. Absolutely correct. Measurement means you are trying to quantify whatever transaction has been occurred. You are trying to quantify that. Example, suppose you are trying to calculate the depreciation. Depreciation is 10% on the asset of 1 lakh. So you are trying to calculate 10% of 1 lakh, right? That is 10,000. So you are trying to quantify it in money terms. So this is called quantification. So that is also absolutely correct. So C option is incorrect. So the correct option would be option number C only. So whoever is incorrect, now we have got the clarity, everyone, right? Okay, Akhil, don't worry, we have the question. This question we have. Let's move to the question number third. Anyone has any doubt in these two questions? Everything is easy? Yes? Yeah, okay. Now let's move to the third question. What is the type of economic event that takes place entirely within the organization. We have talked about this. The internal economic event plus the external economic events, right? So is this upward, downward, external, or internal? It's very easy. We have already discussed that. I hope everyone would be correct here. That takes place entirely within the organization. From the stores department, you are transferring anything to the production department, or suppose you are paying salary to the employees. For the third question, everyone. Yes, I have started to get the answers from everyone. That's really good. Most of you are correct, but I don't know why some of you are incorrect, because it was very easy question. We have just now discussed this. It will be internal. So there would be only two type of economic events. What type of economic event? Internal and the external. We have talked about this right now. Okay? So let's talk about this in detail. Then we will move to the answer part. So the answer is internal. Okay? Most of you are correct. Just let's talk about this internal and external event in brief. So you have identified the economic event in the accounting process. Now you have to identify, is this internal event or external event? So external event in this external event, there is an interaction between entity and outside environment. Just like we have sold the shoes or whatever you are selling it involves your customer as well, right? So if it involves customer, that is the outside party, and it involves the organization as well, so it's a type of external event. But the question says which takes place entirely within the organization, so it will be internal, because in the internal events, interaction is done within the entity. Suppose salary is being paid, right? Salary is being paid, or you are transferring the materials from the stores department to the production department. Correct, everyone? Option number D, right? Okay, cool. Let's move ahead. Question number 4th. Which of the following statement will be recorded in the books of account? You have to give me the answer. You got 10 seconds for it, right? Okay. A new communication channel was implemented by the company. Raj Lakshmi was appointed as the manager of the company. C. Company paid salary to Ratan. Rohit was shifted from manufacturing department to the sales department. E. None of the above. Tell me what should be the answer here, everyone. Which should be recorded in the books of account? You got 10 seconds to answer me, because this is an easy question and we have the easy chapter today, right? A new communication channel was implemented by the company. Okay, I've started to get the answers and most of you are correct. Let's discuss all the options and let's try to eliminate all the options which are incorrect, right? A new communication channel was implemented by the company. Can you measure it in monetary terms? No, you can't. So A would not be the answer. Raj Lakshmi was appointed as the manager of the company. So if you are appointing someone as the manager of the company, you can't measure it. You can't measure the appointment in the monetary terms. So it would not be the answer. But if you're paying salary to that person, then it will be recorded, right? But if you're not paying salary, if right now you're just appointing it, so it will not be considered in the books of account, because you can't measure it in the monetary terms. Company paid salary to the Ratan. Yes, absolutely correct. It would be the correct answer here, right? Because you can measure it. Basically, you are paying it in a monetary terms. Rohit was shifted from manufacturing department to sales department. Only the transfer of the Rohit has been done from one department to another department. So you can't measure it in monetary terms. So it can't be recorded in the books of accounts. So this will be eliminated. None of the above will also get eliminated, right? So yes, everyone is correct. Option number C would be the correct answer. Okay, let's move ahead. Question number 5th. What type of event involves transaction between the outsider and the organization? Just now we have discussed that. Internal, diagonal, horizontal, vertical, or external. You got 10 seconds to answer me this question. Tell me, everyone, what should be the answer here? Everyone should give me the answer. Yeah, I'm getting the answers in my Zoom chat section. That's really good. And everyone is correct. I think all of these 80 candidates are correct. Okay, we got so many people and everyone is correct. And I'm really happy to say this. Good. So that's easy. So if a transaction involves the outsider and as well as the organization, that is going to be the external event, right? Cool. We have already discussed about that. Okay, so option number E would be the correct answer. Let's move ahead with the question number 6. Which of the following given statement is or are correct? Now you have to tell me which of the following statements are correct. First, measurement means the quantification of business transaction into financial terms by using monetary units. Second, communication means determining what transaction to record. Third is recording is the process of entering business transaction in the books of account. So you have to tell me the correct answer and you got 10 seconds to answer me this question. Just read the question very carefully. Okay, so I have got enough answers. You have to tell me the correct answer. Huh? You have to tell me the correct answer, everyone. Okay, so most of you are correct. Few of you are incorrect, but most of you are correct. That's cool. Okay, so we are going to discuss why we are going to eliminate, first of all the options so that you have the understanding of the underlying concept. First option says measurement means quantification of business transaction into financial terms by using monetary units. Absolutely correct. Measurement is the quantification of the transaction. You are trying to find out the monetary value of any transaction. Then only you can record it, right? So it is absolutely correct. Second statement says communication means determining what transaction to record. Is it communication? No, it is not. What transaction to record is the identification process, identification step, right? So this would be incorrect here. Third option says recording is the process of entering business transaction in the books of accounts. So absolutely correct. Recording is the process in which you are going to enter the transaction into your books of accounts, right? Into your tally or register, right? So this is also correct. So correct option would be option number 3. Anyone has any doubt in this question? Clear everyone ki why option C is correct? Whoever has given me wrong answer, are you clear, everyone? So I will give you now 15 seconds to just look at the option very carefully, then give me the answer, right? Everyone is clear? Whoever has given me the wrong answers? Clear everyone? Right, good. Let's move ahead with the seventh question. This we have discussed, right, in detail. You got the explanation as well, right? So while you try to revise it at home, you can read out the explanation as well. Though we are discussing it, but even if you want to do it again, so you can do that. Question number 7th. I'm giving you 20 seconds to answer this question. Which of the following statements are correct? Take read out the option and then give me the answer. I'll wait for 20 seconds. So yes, I have got enough answers. So let me check the chat section. Okay, most of you are correct again. That's good. Good, good, everyone. I'm not going to take out the names, but yes, most of you are correct. Let's discuss that. Let's discuss the answer. Yes, most of you are correct, but not everyone. Answer is option number B, that is 2 and 3. Let's discuss that. Okay. External users are the people inside the business organization. Is it correct? No, it's not. Because external users are outside the business organization, like investors, potential investors, like SEBI, RBI, which are outside the organization, right? And which is analyzing the financial statements for any regulatory purpose and for any other purpose. So they are external users. Internal users are those which are inside the organization. So this will be incorrect. And the question is asking you to find out the correct option. So first is eliminated. Statement number 2, let's look at that now. Labor unions are an example of external user. Now, this is absolutely correct. Why? Look at this very carefully. So suppose you have a small firm, you only got 10 workers, right? But we have got the industry wise labor unions, which basically negotiate on the terms and conditions on which all the workers in the particular industry are going to work for. They also negotiate the compensation, the wages, the terms and condition, the safety environment. So these labor unions are the external users of the financial statement. They try to look at the financial statement and they will see how much profit the company is generating. Please try to understand this. How much profit the company is generating out of this business, and out of this profit, how much they are providing it to the workers as wages. Is this fair wage or not? Aren't they will make sure, these labor unions will make sure कि the workers are not getting exploited in a particular industry. So these labor unions will be, yes, external users. You got the clarity now. Okay, why these labor unions are the external users? But suppose there are labor unions within the organization. So in that case, it will be internal users. But in those cases, it will be specifically given in the question. But when only labor unions are written, then it will be considered as the external users because it is not specifically mentioned कि it is the labor union which is inside the organization. Right? Got it? So labor unions are the examples of the external users. Now you have the clarity why labor unions are the, yeah, okay, good, okay. Now I've got one more good question. The Ayush is saying shareholders are internal users. Very good question. See, if only shareholders are written. So typically shareholders are taken as the external users. Why? Because typically, if I hold the Reliance share, I'm not going to be the part of the management of the company. Try to understand that. Internal users are those which are managing business. They will be board of directors. I'm not going to manage the Reliance. I got the shares of Tata. I got the shares of this Reliance. But I won't be called as the internal user. So shareholders, when only shareholders are written, so the answer would be external users. Okay, let me make it more difficult for you. If suppose promoters are written, promoters are, they are also shareholders, but they're promoters. So most of the time, typically promoters manage day-to-day business, right? They are CEO, chairman, or whatever. They can be the directors as well. They can be in the board of directors. So in that scenario, you can call them internal users. But if the question says shareholders or potential investors, everyone will be in the external user. Got the clarity, everyone? Thick? Okay. Okay. Thick? Please understand this. Thick? Clear, everyone? Now got the clarity? Why these potential shareholders or the shareholders are considered as the external users, right? Tell me. हाँ मनोज, stakeholders, shareholders are same. ठीक है, they are potential investors, or even if they have invested in the company, then also, right? Please understand this. But if they're promoter, then they have the decision making power. If they are in the board of directors, then they will be called internal users. Now, line supervisor is the example of internal user. This is very understandable because they are managing the manufacturing firm, so they will be considered as the internal users. So option number 2 and 3 would be correct. So option number B would be the correct answer here, right? Everyone good? Right? Okay, cool. Now, Yashoda is saying if employees do not take part in the management, they are the part of the management, right? Even if they're not deciding anything, the company's performance is dependent upon them. They are getting salary after this. They are working, so they will be called the internal users. ठीक? Okay, now let's move ahead. Question number 8. Let's move ahead. Okay, come on. The events are recorded in the books of account in monetary terms and in dash order. What is going to be the answer? You got 15 seconds to give me this answer. Events are recorded in the books of accounts in monetary terms and in dash order. Very easy question, very basic question. Everyone. Yes, I've got the answers. And yes, in this question, everyone is correct. Cool. No one is incorrect here. Good, good. So you can eliminate the unsystematic, a word. Diagonal, there is nothing called diagonal. Random, no, you can't enter the transaction in the random order. It will be done in the chronological order only. And what's the reason of that? Why we are doing it in the chronological order? See, accrual basis of accounting says as soon as the transaction is going to happen, you have to record it in your accounts book, right? So the first and most important purpose of generalizing the transaction is to keep the business finances accurate. So as soon as the business transaction is happening, you are going to record it. So when you are doing it, so obviously you are recording it in a chronological order. That's why, right? So the transactions are getting recorded chronologically. Okay. Now, easy question. Let's move to the ninth question of the day. Understand the question very carefully, huh? Because lengthy question. Not the lengthy question. There is a gap only. Okay. Which of the following is not the example of the external event? We are talking about internal and external event. Sale of Nike shoes to the customers. You have to tell me which is not the external event, not rendering services to the customers by Videocon Limited. Supply of raw materials or components by the stores department to the production or the manufacturing department. All right. Purchase of material from supplier, not, we are not transferring material, we are not issuing material, we are purchasing it from the supplier. Payment of monthly rent to the landlord. Now, tell me the answer. What should be the answer here, everyone? Which is not the example of external event? Then we will discuss the options one by one. Very good. Very nice. Everyone is correct. I'm not going to take out the names, but yes, everyone is correct. Cool. Good, everyone. Very, very good. Very, very good. Nice. See, let's eliminate the option now. So most of you are correct. Almost everyone is correct, not most of you. Okay, so option number C would be the correct answer because it is the example of internal event. We have discussed that. Sale of Nike shoes to the customers. You are selling it to the customers. Yes, it's the external event. Videocon Limited, rendering services, external event. You are purchasing some materials from outside suppliers. You are purchasing it from the external supplier. So yes, it is going to be the external event, right? And yes, you are paying the rent to the landlord, external event. So the incorrect option is C, and this would be the correct option in this question. Question number 10th. Which of the following are the names of the accounting principles? Let's read out the option now. Accounting concepts, accounting conventions, accounting postulates, both A and B, all of the above. You got 15 seconds to give me the answer in the chat section. Then I'll check the answers. Yes. Okay. And this, not everyone is correct. What would be the most appropriate answer here, right? As per the modern accounting. So whoever is not giving me the right answer, I think they haven't done the live classes of phase 1. Okay. Okay, cool. Most of you are correct. Yes, option number E would be the correct answer here because we sometimes call it concept, we sometimes call it convention, we sometimes call it postulates. All of the above would be the correct answer here, right? So what are these principles? Let's talk about that first of all, then we will understand the names. Accounting principles are the broader rules and guidelines. Basically, you can also call them generally accepted accounting principles, right? They are the rules and guidelines, right? And by following these rules and guidelines, what you're doing, you are recording the transaction in your accounts book, right? So these are called postulates. Sometimes these are called principles, conventions, modifying principles, assumptions, right? So various names you have. And what are these principles? We are going to talk about all the principles. Don't worry about that. In the middle of the class, we are going to talk about all the principles in brief. Then we will have the second set of questions. What are these principles or concept or convention? Business entity, money measurement, going concern, accounting period, cost. We will discuss that one by one in detail as well. Don't worry about that. Revenue recognition, matching, full disclosure, consistency, conservatism, materiality, and the objectivity. So these are the principles, right? You don't have to remember all the names, but you should remember what is the underlying concept or what is the underlying detailing that has been given in a particular accounting principle. We are going to talk about that as well, don't worry. So the yes, correct answer would be option number E. Most of you are correct, right? Question number 11th. According to Dash concept, the amount of 1 lakh invested in ABC Limited by its owner will be considered a liability to the business. What will come in place of X? Going concern. So what the question is asking to you, it is asking you to fill in the blanks. According to Dash concept, now we are moving ahead with all the concept. Now we are going to discuss the concept in detail as well. Amount of this invested by owners will be considered a liability to the business. Going concern, business entity, matching concept, revenue recognition, none of the above. Let me check the chat section. Okay. So yes, yes. In this question, everyone is correct. Cool. Yes, in this question, everyone is correct, and I'm proud of you all. Really. Okay. Good. Good, everyone. Now, in this question, it is saying, see, I'll just make you understand the question, then we will discuss, we will eliminate the options. It is saying amount of 1 lakh is getting invested in the business. And this money is going to be taken as the liability for the business. Why? Because of separate entity concept. Separate entity concept, or we can also call it business entity concept. It says that key owners and your business are separate legal entity. That means even if the owners are investing in their own business, then also business is going to consider that amount as the liability, because at the time of liquidation, business has to refund the money that has been invested by the owners or the promoters or the shareholders. Got the logic? Why business entity concept is the correct answer? Because it says that the owners and the business are two different legal entities. So whatever owner is going to invest in the company, company is going to take it as the capital, and capital is included in the liability side because they have to return it. Company has to return it at the time of liquidation, right? Before also, if there are some certain terms and conditions, right? So that's why the answer would be business entity concept. Yes, most of you are correct. What about this going concern? Let's understand the concept now. This going concern, matching concept, and revenue recognition one by one. Business entity concept, you have got this. Now let's have the understanding of the going concern. Now, going concern concept says that a business would continue to carry its operation indefinitely. Indefinitely. That means it is going to carry on its business for the foreseeable future. It is not going to close down its business in near future. It is going to carry out, and that's the reason we have the this. That's the reason we recognize the capital expenditure as asset, because we know ki you can't just recognize the capital expenditure. What is capital expenditure? You know, na? Ki when you purchase the machinery, or any asset, first you put that into the asset, right? Then each year you provide the depreciation, isn't it? So just why you are not just recognizing all the expenses on this machinery in a single year? Why not? Because you are assuming this going concern concept, you are assuming that this asset is going to give you benefit for the future period as well. So first you are recognizing it as asset, and each year some part of it you are going to recognize as your expense in the PL account, isn't it? So that's the reason. Got the clarity? Okay, good everyone. So, most of you are correct. So option number B is the correct answer. Now let's talk about the matching concept. So let me rub this slide first of all. What is this matching concept now? Very easy, but important. In this matching concept, what happens? Understand this very carefully. Suppose you have some revenue. I'll give you the example. Suppose you have some revenue by selling 10 goods. Take understand with the help of example. You have got some revenue out of by selling, not out of, by selling these 10 unit of goods. Whatever expenses you have incurred in these 10 goods, that you are going to match in the PL account. So matching concept, why the name is given as matching concept? Because you are matching revenue with the corresponding expenses. Remember PL account or not? This is debit, this is credit. You are going to take revenue here and you are going to take expenses here. You are matching it. And you are only going to take the expenses of these 10 goods that you have sold. Suppose you have purchased 15 goods. Suppose you have purchased 15 goods, but you have only sold 10 goods, right? So the expenses that you are going to take in your PL account will be for how much units? How many units? 10 units or 15 units? You give me the answer in the chat section. For how many units you are going to take expenses in your PL account? For how many number of units you are going to take that? 10 units, absolutely correct. So this is what matching concept says. Easy enough. You are going to match your revenue with the corresponding expenses. You're not going to take the expenses of 15 units. No, you have only sold 10 goods. So you are going to take expense of only 10 goods, 10 unit of goods. Clear, everyone? Yeah, got the clarity? Good. Now, what is this revenue recognition concept? Understand this as well. This talks about the timing. This only talks about the timing of recognition of revenue. When you are going to recognize your revenue in your accounts book, you tell me. I'll give you two options here. When you have received the cash, or suppose when you are selling something, right? When you are you have two options. When you are receiving the cash, or second option is when a right to receive cash is established. Give me the answer give me the answer in the chat section. When you have received the cash, or when the right to receive the cash is established. What should be the answer here? Yeah, when the right is established, right? When the right to receive the payment or the cash or any amount is established. So this is what we have in the revenue recognition. It talks about the timing of the recognition, when you are going to record, when you are going to record the revenue in your accounts book. That's it, right? We are going to talk about this in detail as well. Don't worry. So this question is clear to everyone? Yes. Okay, let's talk about question number 12 now. It says, which of the following statement is incorrect? As per the money measurement concept, non-monetary transactions are recorded in the books of account. You have to identify the incorrect option. Going concern assumes that business would not be liquidated in the foreseeable future. C option says business entity principle is also known as separate entity principle. D option says the cash basis of accounting violates generally accepted accounting principles. None of the above. Which is incorrect here? You tell me. Everyone. So, okay, I have started to get the answers. Okay, I'm still waiting for everyone's answers. Yes, most of you have given me the answer, and yes, the most appropriate answer would be option number A. As per money measurement concept, only the monetary transactions are recorded. Only the monetary transactions are recorded in the books of account. Nice, cool. So this option would be incorrect, and the option number A is correct in the question number 12. And this is very easy, nothing to explain here. We have already discussed money measurement concept. In this concept, it says that only the transaction which you can measure it in the monetary terms, that you are going to record in your books of accounts, right? Okay. Question number 13. It says, again, it says, which of the following statement is incorrect? It is saying incorrect. A option says, it is assumed that a business follows going concern concept. B option says personal transactions and business transaction are distinguished according to the business entity concept. Materiality concept states that expenses incurred in the accounting period should be matched with the revenue during that period. We have discussed that. And we have been asked to identify the incorrect. Cost concept requires that all the assets are recorded in the books of account at their purchase price. Okay, I'll wait for 10 seconds, 15 seconds. Okay, you give me the answer. What should be the answer here? Which is incorrect here? Okay, I started to get the answers. Cool. That's good. That's good. That's good. Really good. Most of you are correct. Okay, let's try to eliminate one by one all the options which are incorrect, right? We will identify which are correct first of all. It is assumed that a business follows going concern concept. It is absolutely correct. So this would not be the answer. Personal transactions and business transaction are distinguished according to business entity concept. Absolutely correct. We have discussed that. Both are separate legal entity. So you're going to identify the concept. You're going to identify the concept as per the business transactions or as per the personal transactions. So this is correct. Third option says materiality concept states that expenses incurred in the accounting period should be matched with the revenue. Oh, this is incorrect. Incorrect. Okay, so we have got the answer, but let's read out the fourth option as well, because otherwise, few of you will say, sir, please make us understand the D option as well. Okay, D option says cost concept requires that all the assets are recorded in the books of accounts at their purchase price. So yes, it is also absolutely correct, because cost concept says that you have to record your assets in the purchase price, right? Now, I'm going to ask you a question. In the C option, what is the concept it is talking about? In which expenses incurred in that accounting period should be matched with the revenue during the same period. What is that? Uh, what is that concept we are talking about right now? Tell me, everyone. Cool. Okay. That's good. That's good. Everyone is correct. Okay. I've started to get the answers. Good, everyone. Good. Everyone is correct. Yes. 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 That is your matching concept. I'm really proud of you all. You all are correct. And the answer is also correct. That is your matching concept. Okay. Let's move to the question number 14 now. It says a trader has made a sale of 50,000, out of which cash sales amounted to rupees 15,000, right? He showed trade receivables on 31st March at rupees 35,000. All right. He has made the sale of 50,000, out of which 35,000 are trade receivable, obviously. Which concept he is following? Business entity concept, accrual basis, money measurement concept, matching concept, none of the above. You tell me what should be the answer here, everyone. Very easy question. I'm giving you 10 seconds for this, right? Yes, everyone is correct. Raja, Arul, Prakhar, Rakshaya, Ayush, Dhaval, everyone is correct. Saurabh, Bhumija, everyone is correct. Cool. Yes, everyone is correct. No one is incorrect here, except for few, except for one or two guys. Everyone is correct. Okay. Okay. Let me just make it simple for you. A very easy question. Only one or two candidates are incorrect here. It will be accrual basis, right? Why? See, accrual basis says you have to recognize all the expenses and all the sale. Take whenever you have right to receive the payment. So it is recognizing trade receivables. Trade receivables are your assets. That means you are recognizing this trade receivable, even if you haven't got the cash, but you are recognizing this, isn't it? So if when you recognize that, that means you are following the accrual basis. You're not waiting cash to be received by you to recognize in your accounts book. You are recognizing it in your accounts book, right? As the asset of trade receivable. So that's why. What are assets? You know, na? That is the resources, economic resources you have, from which you are going to have some receipt of cash, right? So it will be accrual basis. Everyone is correct. Everyone is good. Okay. So accrual accounting is the financial accounting method that allows the company to record the revenue before receiving payment for goods. When you have right to receive the payment or you have right to receive the amount, then you're going to recognize in your books of accounts, right? Clear, everyone? Okay. Now, let's move ahead with the all the options in this question. What is business entity concept? It says that, let's revise. Business entity concept says that owner and the business are separate legal entity. Easy enough. What is this money measurement concept says? It says that the transactions that can be measured in terms of monetary units, only that will be recognized in the accounts book. What does this matching concept says? It says in the accounting period, you have to match the revenue with the corresponding expenses. This is what matching concept says. Every other option is eliminated. Yes. So question number 15. Let's talk about the question number 15. Okay, let's talk about question 15. It says, according to which of the following accounting concepts in determining the net income from business, all costs which are applicable to the revenue of the period should be charged against that revenue? You tell me what should be the answer here. So it is saying in determining the net income from the business, all the costs which are applicable to the revenue, just now we have discussed that, of that period should be charged against that revenue. Dual aspect, matching concept, conservatism, going concern, none of the above. You have got 10 seconds to answer me this question. Right? And it's a very easy question. Tell me what should be the answer here, everyone. Yes, I have to get the answers, but not everyone is correct here. Few of you are incorrect as well. Okay, so I'm getting the answers at the in the YouTube as well. Yes, yes. Okay, for the 15th, Nilesh has okay, Nilesh has given me incorrect answer for the 15th. Okay, okay. In the Zoom chat, I'm getting the correct answer. Study tuber is giving me the correct answer for the 15th question. Right, cool. Okay. So in the Zoom, most of you are correct. Good. Okay, chalo. Let's discuss the options now. Barring few, most of you are correct. Okay, let's discuss the answer now. Okay. So the answer is option number B. Just now we have discussed this thing. What? In the accounting period, you got what? You got debit side, that is cost. You got credit side, that is income, right? So, or revenue. So whatever revenue you are generating, you have to match it with the corresponding expenses in the PL account. So this is what the question is saying. In determining the net income from the business, all the costs which are applicable to the revenue, only the cost which is corresponding to this revenue, only that will be recognized in this particular period. So if there are some goods that you are not selling in this particular period, next period, in the next period you are selling it, so you are going to recognize those costs in the next period, right? Which you are not selling it right now, but you are selling it in the next period. So you are going to recognize the cost corresponding to those revenues in the next period, not in this period. So it says matching concept. Okay, clear everyone? Got this? Yes. Pooja is saying closing stock is example of matching concept. Absolutely correct. Okay. Right. Now, A option says dual aspect concept. Let's try to eliminate all the options. Dual aspect concept. What is this dual aspect concept? Very easy now. It says each and every transaction in the accounts is got to have minimum of two impact. It is going to impact at least two accounts. This is what dual aspect concept says. Take, suppose you are paying salary to the employee. So cash account will be credited, right? We are the business. We are paying salary to the employee. So your salary account will be debited and cash account will be credited. So two accounts are getting impacted. At least salary account, that is the expense account, and the cash account. So this is what dual aspect concept says. Now, what about this conservatism concept? Can anyone tell me in the chat section? Can anyone tell me? In one line only, what is this conservatism concept? What is this prudence concept? It says you have to recognize all the anticipated losses, all the possible losses. You have to recognize it in your accounts book, but all the anticipated profits, you're not going to recognize it. So this is called conservatism approach, prudence approach, right? It is called prudence approach. What is this going concern? We have already discussed that, right? So this is what matching concept says. Revenues are recorded when earned and expenses are recorded when incurred. Matching principles. They are going to be matched with each other, right? And the conservatism concept is the conscious approach. It says that conscious approach should be adopted in ascertaining the income. All the anticipated loss, you are going to recognize that, but all the anticipated profits, you're not going to recognize that. This is what conservatism is, right? Question number 16th. Look at the question very carefully because long question it is, right? Everyone is clear up to 15th question number 15th. Tell me the chat section. Then I'll move ahead with the 16th question. Tell me everyone. Everyone is clear till question number 15? Yes or no? Everyone. Then I'll move to the 16th question. Any doubt? Any doubt? If you have any doubt, you can ask me. If you got any doubt till now, you can ask me. Okay, I can see. I can see. Pratik, just ask me about that. Whatever doubt you have, sir. Sid is asking, what is the difference between accrual and the revenue recognition? Oh, very good question. Very good question. See, you got accrual concept and you got revenue recognition. So accrual and revenue, there is a minute difference. Let's talk about that. First of all, let's talk about the revenue. Revenue says revenue recognition talks about the timing of the recognition of the revenue, but accrual talks about the revenue, timing of the revenue, as well as the timing of the expenses as well. So accrual says if you have right to pay, if you have entered into the agreement, or if you have purchased something, now you have to pay it. Though in the next 1 month you are going to pay that expense, even then you have to recognize that expense in your accounts book. This is what accrual accounting says. Accrual concept says, it says you don't have to wait for cash payment or cash receipt, but revenue recognition only talks about the timing of revenue. It doesn't talk about the timing of the expense. So that's the basic difference between revenue recognition and the accrual concept. Got the clarity? Good question. ठीक चलो. Pratik, each and every concept comes under the gap because gap is generally accepted accounting principle. Now, can you all hear me? Everyone can hear me now? Yes? Okay, cool. Cool. It happens sometime. Okay. Now, good. Chalo, give me the answer of this question. Which of the following given statement is or are correct? The conservatism concept states that a business enterprise will not be sold or liquidated in near future. You have to identify the incorrect statement. The dual aspect concept states that every transaction has a dual or twofold impact. Third option says cost concept requires that all the assets are recorded in the books of account at their purchase price, and you have to choose the incorrect option. Everyone, for the question number 16th, I'm getting the correct answers from everyone. That's good. Okay, whoever is giving me wrong answer, look at the option very carefully. Take, I'm giving you 10 more seconds. Take, easy question it is. Give me the incorrect option. Okay. Let's look at the option and let's try to eliminate all the options. First option says the conservatism concept states that a business enterprise will not be sold or liquidated in near future. It is absolutely incorrect. Conservatism concept doesn't talk about that. Conservatism concept says that all the anticipated losses, you should be recognizing it, right? And all the anticipated gains, you should not be recognizing it. Very easy question, right? So this is incorrect. ठीक. Acha. Second option says the dual. Acha, tell me the answer of first thing. A business enterprise will not be sold or liquidated in near future. Which concept it is talking about? Everyone, which concept is it talking about? In the first option, which concept is it talking about? Going concern. Cool. Very nice. Very nice. Good. Good, everyone. I'm proud of you all. Second option, second statement. The dual aspect concept states that every transaction has twofold effect at least. Absolutely correct. Third option, third statement says cost concept requires that all the assets are recorded in the books of accounts at their purchase. Absolutely correct. So the option number D would be the correct answer because only one is incorrect here and most of you are correct. Approximately 90-95% of you are correct. Cool. Let's move to the question number 17. Which of the following given a statement is or are incorrect? Incorrect. First option, the objectivity concept requires that the same accounting method should be used from one accounting period to the next. This is what objectivity says. So you have to identify the incorrect options. Full disclosure principle states that financial statement should disclose all the significant information, right? The prudence concept is also known as consistency concept. So you have to tell me what is the incorrect options that has been given to you. A option says both 1 and 2. B says 2 and 3. C says 1 and 3. And D says only 2. And E says only 3. Let me check the chat section. Okay, I have started to get the answers. Good. Okay. Okay, I don't know why, Shailendra, you're saying E. Because I have got the answers, correct answers from most of you. But few of you are also saying A. I don't know why. And some of you are also saying, okay, let's eliminate the option. We have to identify the incorrect option. Okay, let's do that. Let's do that together. Objectivity concept requires that same accounting method should be used from one accounting period to the next. No, it is incorrect. Consistency concept says that you have to use the same accounting period year by year. So this will be incorrect, right? Second statement says full disclosure principle states that financial statement should disclose all the significant information. It is absolutely correct. Third option says the prudence concept is also known as consistency. No, not at all. Prudence is also known as conservatism. So what would be the correct answer? 1 and 3. 1 and 3 are incorrect. Now, got the clarity, everyone? Take? Very nice. Okay, let's talk about the objectivity concept now, because in this, everything we have discussed, barring this objectivity concept, because this is the new concept we are talking about in this particular question, right? So let's discuss that as well. What is this objectivity concept? So it requires that accounting transaction should be recorded in the objective manner. What is the objective manner? That means it can be verified through the underlying vouchers. Through the underlying vouchers, it can be verified. This is what this objective manner means. It should be unbiased, right? It can be verified from the source document, that is your invoices, right? So this is what objective is. If amount is written 1000, if you have done the sales of 1000, obviously whatever invoices you're generating, that is also going to have the amount of 1000. So you're going to enter the amount in your accounts book as 1000 only. You can't write it as 1500. Right? So this would be biased. So you should not be biased. It should be objective. The accounting should be objective, right? Free from the bias of accountants and others. Got the meaning of objective concept, everyone? Okay, question number 18. Which of the following given statement is or are incorrect? Now, what is this saying? The cause one more thing I want to tell you, in the phase 2 now, you will have the lengthy questions as compared to the phase 1 questions, right? Please understand this. And you will also find some numericals, though it is the first chapter, so we don't have any numerical here, but you will find the numericals in the upcoming chapters. ठीक? Which of the following given statement is or are incorrect? First option says the cost concept is also known as the historical cost concept. Second option says cost of revenue recognition states that purchase price will remain the same for all years to come. So this is what revenue recognition says. You have to give me the answer. Which of the following is incorrect? Going concern concept focuses on material facts, right? And fourth option says material concept assumes that material concept assumes that the company would not be liquidated in the foreseeable future. Now you have to give me which of the following is incorrect here. Okay, I'm giving you 10 seconds time. Read out the options, read out the all the options, then give me the answer. Okay? Chalo. You got 10 seconds to answer me this question. Okay, I started to get the answers, right? And most of you are correct. That's good. That's good. Harsha, Kapil, Abhishek, Anshu, everyone is correct. Okay, let me check the YouTube as well. Yes. So in the YouTube as well, because this is the important question. So I'm checking it. Yes, everyone is correct. In the YouTube as well. Cool. Nice. Okay. Chalo. Let's move ahead. So the correct option would be yes, option number B. That is 2, 3, and 4. Very good, everyone. Very good. Okay. So I have already ticked it here. The concept of revenue recognition doesn't state that the purchase price will remain same for all years to come. This is not revenue recognition. Says revenue recognition talks about the timing of recognizing the revenue in your accounts book. Going concern concept says that you are not going to liquidate your business in near future, right? And materiality concept assumes that, or it says that all the material information should be disclosed in the accounts book, right? Okay. Let's move ahead with the, and you can, yeah, everyone is correct in this question. Question number 19th. Let's talk about the question number 19th. If two different assets will get increased and decreased by the same amount, the overall impact or effect on the balance sheet will be what? Overall liabilities would decrease, or overall assets are going to increase, overall assets would remain same, overall assets would decrease, overall liabilities would decrease. I am giving you 10 seconds. Just look at the options very carefully, then give me the answers. If two different assets and one is getting increased and one is getting decreased by the same amount. Okay. I've got enough answers here. Let me check the chat section. Yes, Mustafa, Damini, Akshay, Swagat, Akhil, Bhumija, Anshu, Shailendra, Manoj, you are incorrect here. Kapil, Saurabh, Vivash, Akhil, Akshay, Deval, Suhani, Vijay, Dhaval, Prateek, Abhishek, everyone is correct. That's good. Ashutosh. So I'm not going to take each and everyone's name because there are too many answers and all of you are correct. Good. Good, everyone. Very nice. Okay. In the YouTube as well, everyone is correct. Okay. Okay, cool. So the yes, correct option would be option number C. Let's talk about the logic now, underlying logic now. See, it says, I'll give you the example. Suppose you have bought the machinery for 1 crore rupees. Suppose you have bought the machinery for 1 crore rupees. So obviously, your machinery is going to get increased by 1 crore, but simultaneously you are paying it on cash basis. So it is going to decrease by 1 crore rupees. So overall impact will be nil. Overall total of the assets will be nil because 1 crore is getting increase in the machinery amount and 1 crore is getting decrease in the cash amount, right? So overall impact will be nil. Everyone is clear about that? Yes. Option number C would be the correct answer. Let's move to the question number 20th. It says, Mohan purchased goods for rupees 15 lakh and sold 4 by 5th of the goods or rupees 18 lakh. So 4 by 5th of this would be what? 15 lakh multiplied by 4 by 5th. So it will be 12 lakh, right? So goods worth rupees 12 lakh has been sold at rupees 18 lakh. And he has met with an expense of 2 lakh 50,000. So total expense will be 14 lakh 50,000, right? Yes, clear? 12 lakh plus 2 lakh 50,000, that will be 14 lakh 50,000, right? Now, further it says he counted the net profit as 35,000. Yeah, he has counted it correctly. The accountant was good. So 14 lakh 50,000 was your expenses and 18 lakh is your revenue. So your profit will be 3 lakh 50,000. Okay, that is given to us. Cool. It says, which of the following concept was followed by him? Tell me, by doing this, which of the following concept is getting followed by him? Objectivity, matching, conservatism, cost, none of the above. I'm giving you 15 seconds for it because it's a good question. Chalo. Yes, I have started to get the answers and most of you are correct. Really, really good. Okay, everyone, not most of you, but each and every one of you is correct. Okay, that's really good. Okay, in the YouTube as well, everyone is correct. Cool. Okay, now see, very good, everyone. That is your matching concept, and we have discussed that thing. Whatever you have sold, only cost related to that, those goods, only cost related to those goods you are going to take as your expense. So here we are taking it as the 12 lakh plus 2 lakh 50,000. We are not taking overall of 15 lakh because we have only sold 4 by 5th goods. So we are only taking our cost of the 4 by 5th goods. Right? Very good, everyone. Option number B would be the correct answer here. Cool. Now, first part of triple R is complete. Now let's move to the second part. What is that? It's about the retention of the concept. Now, we have to quickly revise all the concept together so that you are ready for the next segment of the reinforcement. What is that? Retention. In the retention, we are going to talk about all the concept briefly, right? So even if you were incorrect till now in any of the questions, don't worry. Just try to understand the underlying concept here in brief for all the questions. Then we will have next set of questions. Okay, so let's start with the meaning of accounting. What is this meaning of accounting? Meaning of accounting says that accounting is the process of what? Accounting is the process of identification. So first you are going to identify the economic events, right? Economic events are those events which can be measured in monetary terms, which are which impact the business. First of all, which impacts the business, plus which includes your transaction in the and which is of monetary terms. These are your economic events. First, you are going to identify that. Then, in the second step, what you are going to do? You are going to measure it. You are going to quantify it. That is measurement. After measurement, you are going to record it in your accounts book. So accounting process is what? Identification, measurement of that transaction, then recording of that transaction, then communication of that required information to the parties, to the users, whether external or internal, right? Okay, so this is what written here. Communicating the required information relating to economic events of the organization to the interested users. Correct, everyone. Now, what is that chart now? What is that chart? Bipash, don't worry about the number of steps. This is just the definition, right? This is not going to be asked from you, what are the number of steps? There are so many definitions of accountings. Just understand the conceptual, the basic part of it. Just have the conceptual understanding. Don't mug up the number of steps. Huh? Okay, what is this flow of accounting information? Now, it says that basically this graph is telling you that this accounting process, the utility of this accounting process, what this accounting process is actually doing. This is doing what? This is connecting you. This is connecting economic events. It is connecting economic events with the users. How? Let's talk about that. You got the economic events. accountant is going to identify the economic events and he's going to measure it and record it. Then he's going to communicate it to the decision makers, isn't it? So what this accounting process is doing, it is linking the decision maker with the economic activity. So whatever economic events you got, without the accountant, without the accountant, users of the financial statements can't analyze these economic events as it is. See, suppose you have given the salary, right? They can't just analyze all the transactions separately. You need to have the report, financial report, in the form of in the form of balance sheet, in the form of PL account, in the form of cash flow statements. And who is going to prepare that? Accountant. By which process? By the accounting process. So this is what accounting does. Accounting links, accounting links the economic events with the decision makers by going through accounting process. Got the clarity? What the accounting is doing here, right? Okay. Now let's talk about the interested users. So in the interested users, we have internal users as well and the external users as well. Internal users like chief executives, financial officers, vice president. I have talked about this in detail. Business unit managers, plant managers, store manager, line supervisors. External users include what? Present and potential investors. See, shareholders. What is written here? Everyone. Shareholders. Take creditors. Why they need financial statements? Because they need to analyze ki, is this financial statement or is this company or business is efficient or effective enough to repay our debt or not. So that's why they are analyzing these reports, financial reports. These are creditors. So they are external users. Then we have debentures. Same, for same reason debentures are using it. Tax authorities, obviously you have this ITR season right now and now it is finished. 31st July was the last date. So tax authorities also needs balance sheet. So if you are a company, you need to file the balance sheet and all PL account as well, right? And even if you file the ITR 2 or ITR 3, you know that you have to give that statement, right? So tax authority need that for the calculation of the income tax. Regulatory agencies like ROC, Registrar of Companies, MCA, Ministry of Corporate Affairs, they need that. Are you complying with all the provisions or not? They're going to look at that. So all the regulatory agencies like SEBI, if you are a listed company, they're going to see that are you complying with the provisions or not. So whether you are following Schedule 3 or not, remember the Schedule 3 or not. So they will see that. So that's what your external users are. Sixth, labor units. We have talked about this. Stock exchanges, again, customers, again, the external users. Now, let's talk about the qualitative characteristic of the accounting standards in brief right now. Reliability, relevance, understandability, and comparability. What are these qualitative characteristics? See, reliability means the statements, we're talking about qualitative characteristics, the statements on which you can trust. These are your reliable statements. They should be unbiased, right? They should be unbiased. The statement should be unbiased and they should be objective. So only then they will become the reliable. What is relevance? Relevance means it enhances the decision making process. It enhances the decision making process. It should be in the time bound manner, right? Relevance means it should be relevant so that the decision can be enhanced. Whatever users are there, they can depend on the information to decide on any aspect. So this is called relevance, right? And understandability, that is very easy. So if any person is knowing the basics of the accounts term, he should be comprehending these financial reports. This is what understandability says. Understandability says whatever accountant wants to convey to the users, exactly that should be comprehended by the users of the accounting information. This is what understandability is. Correct? Comparability, that is very easy. You should be able to compare the financial reports with the previous year items and with the other companies as well. That is what your comparability. So accounting information should have, or must have, I should say, it must have all these qualitative characteristics. Easy enough, right? Okay. Now let's move ahead with the objectives of accounting. Now, see, in the objectives of accounting, what do we have? We have systematic recording of transactions. What do we have in this? It says key you have to record the transaction in chronological order. You have to do the journal entries, you have to prepare the ledger, you have to prepare the trial balance, right? Journal is basically recording, and ledger is basically summarizing, or trial balance is also summarizing, right? So systematic recording of transaction should be done, and this is one of the prime objective of the accounting, because see why it is necessary. Not everyone can remember all the transactions and all the economic event in their mind. So that's why recording is necessary. That's why recording of the transaction is necessary. So that's why this is one of the objectives. Now, ascertainment of the results. Second objective of the accounting is to get the profit or loss through all the transactions we are going to have. So manufacturing or trading account, we call it, or profit loss account we are going to prepare. So this is included here. Another objective is ascertainment of the financial position. What is that? Balance sheet. So preparation of balance sheet is also one of the objectives of the accounting. You should be preparing the balance sheet to get the assets and liability, right? So Kirti Singh sir, will you provide us the PDF of Chris notes? Yes, all these notes will be provided to you, huh? So that you can revise it quickly, right? Don't worry about that. Everything what I'm going to discuss with you all, that is going to be provided you in the form of PDF. Don't worry about that, right? So ascertainment of the financial position. So yes, balance sheet, to prepare the balance sheet is one of the objective of the accounting, so that you have the present position of the asset, how many assets you got and how many liabilities you have at a particular point of time. So this is what balance sheet talks about. Fourth objective is communication information to the users of the financial reports. That is very easy. So this is also one of the objective. After you have prepared the balance sheet, after you have prepared this PL account cash flow, you have to communicate it to the various users. This is also one of the objectives of accounting, right? Clear? Let's talk about in brief about the basic terms in accounting. Very easy. We got assets, we got liabilities. So assets are all the economic resources which have the values or which is going to give you benefits in the future time periods. All these are called what? All these are called assets, right? Now, in the assets, we got two types of assets, non-current assets and the current assets. Again, very easy. Just a simplified definition right now we are going to talk about. As per the schedule 3, we will see that what is the specific definition in later classes. But for right now, just have the brief understanding. Non-current assets are all those resources which is going to get us benefit for a period of more than 1 year. These all are your non-current assets. Easy enough. And current assets are all those assets which is going to give you benefit, for a particular year only. So that is your current assets. Clear? Liabilities are all your obligations or debts that you must pay at the future time. So these are called liabilities. Easy enough. Everyone knows about this. And I hope all you are getting, and I hope you all are already aware with these facts, but we are revising it in the crisp manner, right? Quickly. Long term liabilities are those liabilities or those obligations which you need to pay after 1 year as well. That is your long term liability or non current liabilities. Short term liabilities are all those obligations which you need to pay within 1 year, right? Okay. Then we got capital. So capital is very easy. It is the amount invested by the owners. It is the amount invested by the owners in the business. This is what we call capital, right? It might be brought in the form of cash or or in the form of asset like car, furniture, table, etc., or computers. Whatever owner wants to contribute to the company, he can do that. What is the sales? Very easy. It is the revenue, total revenue from the goods or services you have sold. Easy enough, right? Now we have you got the meaning of sales. Now creditors. Now see, what are these creditors? Please understand this. Creditors are the persons and other entities who have to be paid by us. That means in the past, they have given us loan, or suppose we have purchased some goods from these persons, right? And we have to pay them back. We have to pay them back the money. So these are called creditors. We have to pay them back, right? So these are called creditors. Easy enough. Now, what will be the debtors? Again, very easy. So if we are selling goods to them, if we are selling goods to them, but they are not paying us right now, they are going to pay us after 2 months or 3 months or 1 year, right? So they will be our debtors. So debtors are persons or entities who owe to the enterprise. They owe us. They are going to pay us money in the future time period. So they are the debtors. Okay. What is revenue? Revenue and sale, you can use that interchangeably. So revenues refers to the income that a business earns from the normal operations. Stick from the normal operations like the selling of goods or rendering of services or other business activities. So these are called revenues. Are you saying so tangible and non-tangible assets are current or fixed asset? Tangible and non-tangible assets, mostly they are fixed asset. Now mostly they are fixed asset. Tangible the asset, see, you will see now most of the time, see, you have inventories, so inventories will be your current asset, right? But if you have the machinery, then you have the non-current asset. That depends ki for how many term you are going to have the income from that asset, right? That is going to be the deciding factor, which is your current or which is your non-current. What about expenditure? Now in this I'm going to ask you a question as well. Very important slide, very important test note. So expenditure is any outflow of funds or payments made by the individual, any outflow of fund. Take, so whether you are paying salary, if we are a company, if we are paying the salary, right? Or if we are purchasing the asset or machinery, then also, so everything is included in the expenditure, like acquisition of property, payment of salary, settlement of debts. But inside this expenditure, we got three terms, that is revenue expenditure, capital expenditure, deferred revenue expenditure. Now listen to me very carefully here. What is this revenue expenditure? Revenue expenditures are those expenditures which belongs to day-to-day operations, and they generate revenue in the normal course of business. They generate revenue in the normal course of business, and whatever expenses you are doing it, I'll give you a shortcut for that. Whatever expenses you are going to recognize in the PL account, and second identification is they are recurring in nature. Okay, so they will be incurred frequently, very frequently. So these are called revenue expenditure. They will be shown in the PL account, that is profit loss account. But on the other hand, when we talk about the capital expenditure, it is the when the company is spending some funds to basically acquire the asset or to increase the capacity of the business, right? For that, and for these expenditure, they are not very frequent expenditure, they are less frequent, they are non-frequent, and due to these expenditure they are going to get benefit for the longer duration of time. So these are your capital expenditures. So let's read out the formal statement as well. It refers to the funds spent by the company to acquire, upgrade, or improve long-term assets. Got it? Easy enough. When you have bought the machinery, when you have bought the car and all, ठीक? So these expenditure will be capital expenditure, and the shortcut trick is that these you are going to show it on the balance sheet at the date of transaction. You are going to show it at the balance sheet. You're going to show it in the balance sheet, not in the PL account, right? Okay, like for the example, you got purchase of land or buildings, investment in the new machinery, expansion of the existing facility. Now, what is this deferred revenue expenditure? What is that? Deepika is requesting you to turn off AI companion feature. What is that? What is that, Deepika? Have you done that by mistake? Okay, I don't know. What was that? A pop-up came into my screen. Okay. Chalo, let's discuss about the deferred revenue expenditure. So deferred revenue expenditure is that expenditure which is treated initially as the asset. Now, see, understand the difference between capital expenditure and deferred revenue expenditure. It is very important. See, this deferred revenue expenditure is also going to be included in the balance sheet, but there is a difference. It is not the capital expenditure. Why? Because they are not the actual asset. They are the fictitious asset. What is that now? See, like when you have done the heavy advertising expenses. So first, you are going to show it. First, you are going to show it as the asset. And each year, these heavy advertising expenses or the preliminary expenses. What are these preliminary expenses? These are the expenses which you have done before the incorporation of the company, right? So first, you are going to recognize this as the asset only in your balance sheet, and year after year you are going to recognize the certain portion of it as the expense in your PL account. This is a deferred revenue expenditure. Why it is being called revenue expenditure? Why it is not being called capital expenditure? Why? What is the logic? Logic is that here in this deferred revenue expenditure, you are not actually buying any physical asset. That's the difference. In the capital expenditure, you are actually buying the physical asset like the machinery and all. That's the logic, right? So deferred revenue expenditure is used to refer to the expense that is initially treated as the asset and gradually recognized as the expense over the specific period. We have talked about this. Clear, everyone? Okay. Now let's have a brief overlook. Let's have a brief look of the accounting principles in the crisp manner, right? In the crisp manner. Okay. Now, what are these principles? First of all, understand that. So these are the rules and guidelines which every accountant must follow while preparing the financial statements. These are the accounting principles and the concept. And what concepts or principles we have? We got these many concepts or principles. But other names given to these accounting principles. Remember the question, we have done this, and few of you were incorrect as well. So now you will not be incorrect here. So we can call them accounting concepts, accounting conventions, accounting postulates. And then we have generally accepted accounting principles. So from the Indian point of view, you can call them equivalent to accounting principles. But see, US government or US accounting body follows this generally accepted accounting principles, right? But don't worry about the US accounting policies or principles. Just understand this generally accepted accounting principles. They are same as the accounting principles, right? But how are these accounting standards are different? This is important. How are these accounting standards are different than that of accounting principles or than that of GAAP, that is generally accepted accounting principles? The difference is that key accounting principles or concept or convention or postulates are the broader guidelines, but when it takes the form of law, when it has the legal backing through the MCA, that is Ministry of Corporate Affairs, or the Government of India, or through the ICI, that is Institute of Chartered Accountants of India, when it has got the legal backing from uh, all these parties, right? All these stakeholders, when it has got the legal backing, then we call them accounting standards. I'll give you example for that. See, accounting principles are the set of principles, right? Like suppose your parent, your guardian is saying to you, ki don't overspeed on road. This is like general guidelines given to you. It is like the generally accepted accounting principle because everyone is accepting that, because that will be harmful for your health. You might met with the accident if you overspeed on roads. But if now when you go to the highways or expressway, you got the hoardings of overspeeding. If you overspeed, if you exceed the speed of your car more than 80 kilometer per hour, then there will be a challan that will be issued to you. So that is the type of account. I'm using the metaphor, huh? Please understand. I'm giving example. So that's a type of accounting standard. It has got the legal backing now. So this is the basic difference between the accounting concept or principles and accounting standards. So accounting standards must be followed by each and every organization, right? Because it has got the because it has got the legal backing. Okay, someone is saying speed thrills, but it kills. Yeah. Okay, so you have got the understanding what is the difference between accounting principles or concepts and the accounting standards. Now let's move ahead. These are the accounting standards. Let's talk about that in brief. What does we have in the entity concept? So in the entity concept, we have already discussed that the entity concept says that key owners and the business are the separate entity. We have talked about this in detail, right? And accounting records are to be done from the point of view of the business, not from the point of view from the not from the point of view of the owner. His personal expenses are not going to get recorded in the accounts book of the business, right? Okay, this is the second point of the entity concept. What is this money measurement concept? Only those transactions and happenings in the organization which can be expressed in terms of money, only those transactions are going to get recorded in the books of account, right? Easy enough. For example, sale of goods and payment of rent. What is this accounting period concept now? What is that? These accounting period refers to the span of time. See what happens in the accounting period. I'll give you first of all an example. You can't make the financial statements for 5 years, 6 years, because it will not be comparable from other companies. So there is a standard, or there is a concept that's called accounting period concept. So generally it takes one financial year and says all the transaction that relates to this financial year should be recorded together. Then it will have the more comparability with other accounting, with other financial reports. So this is what it is saying. Whatever expenses or revenues you are recognizing, you should be doing that for a fixed period, This is what accounting period says. So accounting period refers to the span of time at the end of which financial statements of an enterprise are prepared. Correct? To know whether it has earned profits or it has incurred losses in that particular accounting period. So that's why we use accounting period concept. All right. What is this revenue recognition? This talks about the timing of the recognition of the revenue. And when we are going to recognize the revenue, when it is realized, And what do we mean by realization of the revenue? It is realized when we have the right to receive the payment. When it is established, that we are going to get the payment, definitely, we are 100% sure of that. And we can also measure the amount, which amount we are going to get that. So then we are going to record it in our accounts book. This is called revenue recognition. Clear, everyone? Brief revision is done. Now let's talk about the accrual concept. Again, just like the revenue recognition, we have got this accrual concept, but the difference is only that accrual also talks about the expenses part. Apart from the revenue part, it also talks about the expenses part. It says you're not going to wait till you are going to pay in monetary form. No, you're not going to wait till that point. As soon as transaction is done for the expenses, you're going to record that in your accounts book. So it says that revenue and expenses must be recorded when they occur. The expenses as well as revenue, when they occur, you have to record that. You don't have to wait till the cash is received or paid. This is what your accrual concept says. Now, matching concept. We have talked about this. So revenue should be matched with the corresponding expenses in a particular accounting period. So only expenses that corresponds to the particular revenue, only that will be entered in the accounts book, right? Okay. Going concern concept, we have done this. Key, it is going to continue for the foreseeable future or indefinitely. This is what going concern concept says. Cost concept says that you are going to record all the entries in the historical cost or in the purchase price in your accounts book. This is what cost concept says. Easy enough, right? What is this dual aspect concept says? It says that every transaction is going to have every transaction is going to impact at least two accounts, right? And due to this dual aspect concept, you have the double entry system. So this double entry system has been derived from the dual aspect concept, because dual aspect concept says what? Every transaction is going to impact at least two accounts, and double entry system says that only. So it has been derived from the dual aspect concept only, right? So one more thing it talks about the fundamental accounting equation. This dual aspect concept talks about the fundamental accounting equation. What is that? It is asset is equal to liability plus capital. So whenever you got any transaction, every time, each and every time, this equation will be balanced. because that transaction is going to impact at least two places. Either it can impact the asset side, one item of the asset, and simultaneously another item of the asset. Or what it can do, it can impact the one item of asset and simultaneously it is impacting the another item of the liability. So your balancing will always be there. So balance sheet, the name is given as the balance sheet because of this only, because total assets and total liabilities, liability means liability, external liability plus capital, they will always be equal. That's why name is given as balance sheet. They will always be balanced, right? So this is what dual aspect concept is, and it gives rise to the double entry system. And in this double entry system, what we are following, this question has been asked in the phase one. Huh? You remember or not about the dual aspect concept and the double entry system? You remember this, right? So this, the basic principle that is being followed in the double entry system is what, that every debit must have the corresponding credit, right? So whatever, so total of debit will always be equal to total of credit. This is the basic principle that we follow in the double entry system, and it has been derived from the dual aspect concept only. What is full disclosure concept? Very easy. All the material and relevant facts that is going to impact the financial performance, right? It is going to be recorded in the accounts book. What is consistency concept? So whatever policy you are using in a particular accounting period, like for the depreciation, you are using straight line method, right? So same method you are going to use for the next year, same method you are going to use for the next year, and year by year you are going to use the same accounting policy. This is what consistency concept says, right? Conservation concept, it's also called the prudence concept. Very easy again. It says the losses shall be recognized immediately. So if you got some anticipated losses, you have to recognize that instantly. But if you got some anticipated profits, you're not going to recognize that. This is what conservatism is all about, right? In the accounts, accountant will be recording the losses, but he's not going to record all the anticipated profits. So this is what conservatism is. In the general English also, this is what conservatism is meant by, right? What is this objectivity concept? And you can call it in the simple English, policy of playing safe for the conservatism concept, right? In the objectivity concept, we have talked about this as well. The concept of objectivity requires that accounting transactions should be recorded in the objective manner. That means it should be free from the bias of the accountants and the others. So if you want to show good image of your financial statement or good financial position, right? So you can overestimate your asset. So you should not do that. You must not do that. It should be objective. It should be verifiable from the underlying vouchers, from the underlying source document. It should be objective. It should be unbiased. This is what objectivity concept is. Materiality concept, again, only the material facts you have to recognize in your accounts book. Immaterial facts, you can omit that, right? That is not going to impact the decision. How do you decide the materiality? How do you decide which amount is material or not? Which transaction is material or not? That depends. If inclusion of this transaction is going to impact the decision of the users or not. If this transaction is impacting the decision of the users, right? That depends on the nature and amount of the transaction. If it is impacting the user while he's making his decisions, then it is a material transaction. You have to record that. But if it is not impacting that, then it is immaterial, right? Okay. Now, this is very important. What is this? Fundamental accounting assumptions. What is that now? You have to remember these three. Very, very important. Going concern, consistency, and the accrual concept. These three are called fundamental accounting assumptions. But let me tell you why. We have discussed these are called fundamental accounting assumptions. But because while you prepare, if I consider you the accountant, if you prepare the financial statements, right? So when you do that, you are going to assume that these concepts are true. These concepts are true. Even if they're not accounting standards, but you consider that to be true in each and every financial statement. So why? Because these concepts have got the legal validity by the formation of AS, right? So indirectly, in the AS1 and in the AS18, we have got the legal validity or legal backing of these accounting concepts. So going concern, consistency, and accrual. Please remember this. Type it, everyone, in the chat section. What are these? Uh, what are these three fundamental accounting assumptions that is going to be considered true always? So you don't have to mention it separately. You are following this, but if you're not following anything, if you're not following consistency, then you have to separately mention it in disclosure. So going concern, consistency, and accrual. Everyone should remember this. Somebody is asking. Okay, good, everyone said. Okay, so Yashovardhan, good, everyone. They were asking what is the difference between full disclosure and the material. They are opposite of each other. A question could be asked from you: ki what is the opposite of full disclosure? What is the opposite of full disclosure concept? So full disclosure says ki everything has to be disclosed in the accounts book that is significant, right? But material says, material has the in-depth definition. It says only the material amount will be recognized in the accounts book. The immateriality part will be eliminated. And this materiality and immateriality is judgment based depending upon the accountant. But if the auditor comes and if he asks the accountant, uh, why didn't you record this transaction or this amount? He has to prove that according to his judgment, this amount is immaterial. So that is based on the judgment materiality, right? But full disclosure says every significant thing should need to be are going to be disclosed in the accounts book. Okay. So materiality is judgment based, right? Okay. That's it. Now we got the third criteria of triple R, that is reinforcement. How we are going to do that? We have in the crisp manner covered all the topics in these two chapters in a very crisp manner and in a very quick manner through the help of charts, right? All the theory base of accounting and all the introduction to accounting. Now we have got second set of MCQs. Now in these MCQs, we are not going to have the detailed discussions of the MCQs. Why? Because in the first set of MCQs, we have done that. And in the second segment, we have discussed all the revision part. We have done all the revision part. Now we will be moving ahead with the speed because now everything is revised to everyone, right? Chalo, let's move ahead. Which of the following events you might find this easy? The questions now because we have revised all the concepts, underlying concept in the crisp note, right? Tell me, which of the following events would be recorded in the books of accounts? Value of human resource of a company, changes in the managerial policies, appointment of personnel, purchase of stationery on credit, none of the above. Which would be recorded in the books of account? Everyone. Okay, I will be waiting for 10 seconds. And yes, I have started to get the answers. Very, very good, everyone. I'm proud of you all. Cool. Everyone is correct. Okay. Okay. Good, everyone. Good. Everyone is correct. The answer would be yes. Option number D, purchase of stationery on credit. Right? It is very easy. Value of human resource of a company. You can't measure it in the monetary terms. Changes managerial policy. You can't do that. Appointment of personnel. No. So yes, purchase of stationery on credit. Very good, everyone. I'm proud of you all. So let me take the name. The ghost is saying we are blessed to have you. Thank you. Himanshu is correct. Abhishek is correct. Shailendra is correct. Suhani, Gulshan, Swagat, Bhumija, Saurabh, Sukirti, Jyoti, Ashutosh, Ashwardhan, Ayush, Raja. Okay, everyone is correct. Okay, fine. There are so many people. I'm not going to take out all the names because it will take a lot of time. Okay, everyone is correct. Everyone. All the 60 candidates are 61 candidates are correct. Okay, cool. Let's move ahead. Yeah, the answer is option number D. Question number 2. The first step in the process of accounting is what? First step in the accounting process: identification, recording, measurement, communication, none of the above. Okay, tell me, everyone. Tell me, everyone. Tell me. Okay, so in the YouTube also, everyone is correct. Okay, please in the YouTube write 1 or second. Huh? If you write only D, I'll not get the understanding of which question you are answering, right? Okay. So for the second question, everyone, yes, the first step of process of the accounting is correct, correct, correct. That is identification. Okay, I'm proud of you all. Okay, everyone is correct. Now, after the crisp revision, you all are going to do all the question correctly. Very nice. Okay, cool. That is identification, right? Okay. ठीक है, let's move ahead. Question number third: reliability, relevance, understandability, and comparability. We have talked about this. Are popularly referred to as what? Quantitative characteristic of accounting information, qualitative characteristic of the accounting information, basic accounting assumptions, key accounting principles, none of the above. Tell me what should be the answer here. I'm giving you 10 seconds to answer me this question. Very easy question. Everyone. Yes. Yes. So in the YouTube also, I'm getting the correct answers, but Deepak has given me incorrect answer. I don't know why. Relevance, reliability, understandability are what? Are what? They are the qualitative characteristic, right? What is this? Reliability. You should be able to trust on the information. What is relevant? You should be able to use it. It should be relevant. If I give you, if I give you the financial statement of Reliance of 2002, and you are the present shareholder, is it going to be relevant for you? No, it is not. That's why it should be relevant. Understandability. Whoever has the basic knowledge of accounting terms should be able to comprehend what the accountant is trying to convey to the users of the financial statements. This is what understandability is. And comparability, we all know that. Okay, so the correct answer is yes. Qualitative characteristic of the accounting information. Most of you are correct, but I have got few incorrect answer in the I think few incorrect answer in the YouTube, right? Okay. Okay, now everyone is correct. Good. Christian is asking, sir, any update on results? Don't focus on result, Christian. Focus on the efforts, right? Remember the Gita thought? Okay, just do the study part, right? Forget about the result, right? Okay. Let's move ahead with the fourth question. Again, the easy one. Who among the following would be classified as the external user of the accounting information? Tell me, everyone. Business unit managers, financial officers, SEBI, and vice president, line supervisor. External user you have to identify. Very easy question. I think most of you will be correct here. And yes, Pratik, Durga, Akshay, Ruby, Abhishek, everyone is correct. I'm not going to take out the names, Alok and all. Everyone is correct. Good. Cool. Chalo. Now after the crisp revision, everyone is marking the correct option. Okay, cool. Option number C would be the correct answer. That is SEBI. Question number 5. As an information system, accounting is what? As the information system. What is information system? You got some input as the economic events, then you process it through the accounting process, then you have the financial reports as the output. This is what information system does. Na? What does an information system do? Information system has got some input, then it processes it, then it provides you output. So when you are using accounting as the information system, which of the following is correct? So as the information system, accounting is viewed as the chronological record of the financial transaction of an organization at an actual amounts involved, is viewed as the process that links the information source. Sources like vouchers, invoice, or the accountant as well could be the source, because he's entering it in the registers, or he's entering it in the tally, right? So linking between the information source to the users by means of a channel of communication. We have seen this. Tick. C option says is viewed as the means of determining the true income of the entity, is viewed as the service which is in demand in the society, with accountants being willing to and capable of providing it. So what should be the correct answer here? Okay, I've started to get the answers. Nice. Okay, cool. Everyone is correct. Barring few. Okay, barring few. Okay. In the YouTube as well, most of you are correct. That's good. So the answer would be option number B, not A. Please understand, we are talking about the information system. So it is linking flow of information system. It is linking the source with the decision maker, that is users, through the communication channel and through the accounting process. Right? Take B would be the correct answer. Okay, let's read out the explanation as well. If you take it as the language, whoever has given me the answer as A, see, it is the answer of, if you take accounting as the language, it is perceived, not the language, but let's read out the language in a separate form, as a language. If you consider accounting as the language, it is perceived as the language of the business, which is used to communicate information on the enterprise. This is the definition when you use accounting as the language. If you consider accounting as the historical record, so now it is viewed as the records of the past financial transactions. So option number A is incorrect, right? Chronological record. So it is the answer of as a historical record when you consider accounting as the historical record. As a current economic activity, as an information system, we have discussed. As a commodity, commodity means specialized information. The accountants are providing the service of making the financial reports. So you can take it as the service or as the commodity as well, right? Okay. So the correct answer would be option number B. Let's move to the question number 6. Capital is one of the important accounting terminology. Which of the following is incorrect about the capital? Give me the answer very quickly. You got 10 seconds only. Easy question, nothing very difficult here, right? Amount invested by the owner. Incorrect. We have to choose incorrect, right? Amount invested by the owner in the firm is known as capital. It may be brought in the form of cash or asset for the business entity. Capital is the obligation and a claim on the asset. It is shown on the asset side of the balance sheet. Tell me, everyone, where do you recognize the capital? On the liability side, right? So option number D is definitely incorrect. It is saying what? It is saying it is shown on the asset side. No, it is not shown on the asset side. Okay. This is the PL account. This is the balance sheet in which you have got liability here and you have got assets here. So the capital you will show it here. Okay? In the horizontal format. So it is shown in the liability side, not on the asset side. So option number D would be incorrect. So option number D is right answer here. Correct, everyone. Okay. C option is saying, okay, let's read out other options as well. Amount invested by the owner in the firm is known as capital. It is absolutely correct. What is the doubt? B saying it may be brought in the form of cash. So owner can contribute in the form of cash or in the form of assets or equipment as well. That will be called as the capital. For the business entity, capital is the obligation. Yes, absolutely. For any business entity, this capital is included in the liability side. So when it is going to be liquidated, they have to return the money. It is their obligation, right? Business has the obligation to return this money at the time of liquidation. And it also shows the claim on the asset. So obviously, every liability shows the claim on the asset. So what happens? You have to, at the time of liquidation, company has to sell the assets to basically fulfill their obligations to the external creditors or external liability holders or to the shareholders as well. You have to sell all your assets. So it is representing claim on asset for the business. Correct? So all the options are clear. So yes, option number D would be the correct answer. Good, everyone. Okay, let's move ahead. Okay. Question number 7. Which of the following statement is incorrect in respect of the accounting principles? What is incorrect? Accounting principles. We have discussed that, huh? Only those transactions and happenings in the organization which can be expressed in terms of money are to be recorded in the books of accounts. Accounting period refers to a span of time at the end of which the financial statements of enterprise are prepared. The accounting records are made in the books of account from the point of view of the owner and not from that of the business unit. The accounting transaction should be recorded in the objective manner, free from the bias of the accountants and the others. You have to choose the incorrect option. I am giving you 15 seconds for it. Read out the option, then give me the answer. I'll wait for 15 seconds, right? Okay, everyone. Read the options carefully, then give me the answer. Okay, everyone. Okay, I'm giving you 7 more seconds. Okay, for the question number 7th. So I'm also getting the answers in the YouTube, and in the YouTube, I have got the correct answer. Let me check the chat section in the Zoom. Okay, so what answers I'm getting in the... Okay, everyone is correct. Nice. C option is correct in this. Good, cool. So it says C option is incorrect basically. That's why the right answer is C. The accounting records are made in the books of accounts from the point of view of the owner? No. It is made from the point of view of the business, not from the owner. Okay. Option number C is the correct answer. Let's move to the question number 8. Which accounting assumptions allow us to charge the revenues of the period only that part of the asset which has been consumed or used to earn that revenue in that particular period and carry forward the remaining amount to the next years over the estimated life of the asset? Which accounting assumption does that? Certain revenue we are charging it, certain part of the asset for that particular period. Full disclosure, dual aspect, consistency, money measurement, going concern. Tell me what should be the answer here. Everyone. Okay, that's good. That's good. Are you saying option out here? See, if you're not getting any option here, choose the most appropriate. You are going to give the exam of IBPS. You have to choose the most appropriate option here, right? And remember the keywords here. Over the estimated life of the asset. We have discussed that. In the case of capital expenditure, we are not recognizing the complete cost in the PL account for the particular period, but instead what we are doing it, we are considering it as the asset, isn't it? And then we are charging some depreciation each year. Why do we do that? We have talked about that in certain concept. Yes, now everyone is correct. The option number E would be the correct, most appropriate option here. Yes, think that would be going concern. See, look at the key wordings over the estimated life of the asset, right? Over the estimated. So you are considering you will be in operation for the foreseeable future. So you have to look at the keywords. Take you are carrying forward the remaining amount to the next years. Take so we have talked about this. Why you are showing it? Remember the revenue expenditure, capital expenditure, and the deferred revenue expenditure, in which we have talked about this. So going concern says that you are assuming that your operations are going to be you're not going to liquidate your business in the foreseeable future. So you're going to continue it. You're assuming that. That's why you're showing it as the asset. If you consider, suppose you consider that your business is going to right now in this particular year, it is going to be liquidated. You are not allowed to consider this as your asset. You have to show all the expense of the asset in a particular time period, in a particular accounting year. That is the difference, right? Clear, everyone? Okay, good. Let's move ahead. Question number 9. On 1st February 2022, an old plant was purchased for 50 lakh by Rama Enterprise, which is into the business or manufacturing soaps. An amount of 20,000 was spent on transporting the plant to the factory site. In addition, 30,000 was spent on repairs for bringing the plant into running position and rupees 25,000 on its installation. Total amount you have to tell me that would be recorded in the books of account. Tell me what should be the answer here. I just have to add all the amounts because everything is necessary to bring the asset to the present location and condition. So 50 lakh plus 20,000 and you got 30,000, right? Because you have to do that repairing to bring the amount to the running position, and 25,000. So very easy. You can add this 50 lakh 75,000. So let me check the chat section. Everyone who is correct here. Yes. So you just have to add all the amounts. Very easy question, and everyone is correct. Very good, everyone. Very, very good. Very, very good. In fact, in the YouTube also, everyone is good. Very, very good. For the YouTubes as well. For the YouTube candidates as well. Okay, cool. Let's move ahead. Okay. Now we have 10th question. Suppose the firm purchases a machine worth rupees 10 lakh on credit. It will do what? On credit, we are doing that. Increase an asset on the one hand and reduce the liability on the other. Increase an asset on the one hand and reduce the asset on the other. Increase an asset on the one hand and increase the liability on the other. Increase an asset with no corresponding effect on liability. See what happens. Always your liabilities and assets are going to be balanced. They are always going to be equal. So if you are purchasing the machinery, what should be the answer? I'm giving you 15 seconds for that. Tell me what should be the answer within 15 seconds. Okay. For everyone, it is 15 seconds, right? After 15 seconds, I'm going to Okay, I've started to get the answers in the YouTube, and let me check the Zoom as well. Okay. Yes, cool, easy. Okay, let me explain that. Everyone is correct. Good, good. Let me explain that. Very easy it is, right? So you are purchasing the asset or machinery. So your machinery on the asset side is going to increase by 10 lakh rupees. Easy enough. But you are purchasing it on the credit basis. So this is your obligation, this is your liability. So liability is also going to be increased. Suppose you have purchased this machinery from Y Limited. So on the liability side, it will be written Y Limited with the amount of 10 lakh rupees. So liability is increasing, simultaneously your asset is increasing. So absolutely clear, everyone, and everyone is correct as well. Is there anyone who has some doubt in this question or in other questions we have discussed right now? We have discussed 10 questions. I think no one has any doubt in these 10 questions. Tell me if you got any doubt in this 10th question. No, tell me everyone. If you got any doubt in this question, I'll repeat that because this is related with the accounting equation. No one has any doubt. Okay, that's cool. Okay, cool. Everyone is saying no. Bhumija goes. Okay, everyone is saying no. Okay, cool. Let's move ahead. Good. Pratik Singh sir, will asset and liability increase or decrease in one way only? What? What is that question? Pratik, rephrase it. So you have to balance your asset and liability. For that, anything could happen. Just need to remember that if your liability is getting increased, simultaneously your assets are going to increase. Or if one item of liability is increasing, another item of liability is going to decrease to balance the overall amount because this has to be balanced. Okay, this is done. Under the accrual basis of accounting, you tell me what should be the answer. I'm giving you 15 seconds to read it out. Okay, I'm not going to read the options. You have 15 seconds to read it out. Or okay, I'll give you 20 seconds for it. Under the accrual basis of accounting, which is correct here. Okay, you got 20 seconds here. I will be waiting for 20 seconds. Okay, so I have got the answers as well. So fast you all are. Okay, that's good. Chalo, I'll read the options now because I am getting the answers. Okay. Under the accrual basis of accounting, revenues and costs are recognized in the period in which they occur rather than when they are paid. So we are talking about accrual basis. So in the first option itself, you are getting the answers, but let's eliminate all other options as well, right? Let's try to understand if the answer is D or A. Let's read other options as well. No distinction is made between the receipt of cash and the right to receive cash. There is a clear distinction between these two things. That's why accrual system of accounting is there. Third option says monetary effect of a transaction is taken into account in the period in which cash is usually received. No, cash is not taken in the accrual concept. So okay, so now everyone is clear. What should be the answer? We have eliminated all other options as well. Yes, everyone is correct. Option number A is the correct answer because this is the talking about the correct statement. No one else is correct here. Everyone has eliminated all other options, right? Pratik Singh, if liability decreases, asset decreases. Yes, obviously, simple mathematics. It might happen that if liability is decreasing, asset is going to decrease to balance it out. Or it might happen that if one item of liability is decreasing, another item of liability is increasing to basically nil the impact of decrease in liability, right? Pratik? Okay, cool. Let's move ahead. Harsha Singh, sir, B statement is correct with respect to accrual. Why? Uh, it is saying, Harsha, look at the statement very carefully. It is saying no distinction is made. Is it really the case? Clearly, there is a distinction between receipt of cash and the right to receive cash in the accrual basis. When you got the right to receive cash, you record it. There is a distinction between right to receive and actual receipt of the cash. There is a clear distinction as per the accrual basis. And when you are going to record a transaction, when you have the right to receive, so there is a distinction, but the option says no distinction. So is it? It would be incorrect, na? Because it is saying no distinction. Got the clarity, Harsha? Got the clarity? Yeah, cool. Now you have the clarity why this is incorrect. Okay, good. Okay. Next question. Where we were, yeah, this question number 12. If the asset of the enterprise are 6,80,000 and the outsiders claims are 1,30,000, then what is the value of the capital? Would be very easy. It is asset is equal to what? Liability plus capital. You all know that 6,80,000 you got, and you got outside liability as 1,30,000, and capital would be what? 6,80,000 minus 1,30,000. So that would be easy, 5,50,000. You can do this mentally. Right. Okay. So see, in the other classes as well, we will have the more numericals, because other classes, because the upcoming classes have the weightage of numericals. So till now, all the recruitment drive that SEBI has done, they have provided the on-screen calculator. But this time, there is no guarantee, because the timings has been increased to 90 minutes. So it might happen you would not find any calculator. It might happen. It might also happen you would find the on-screen calculator, just like the previous recruitment drives. So whatever questions we are going to do in the upcoming classes, we can use the calculator. But when you do the practice on your own at the home, when you're going to do the self-study, just try to calculate the amount from the pen and copy as well, right? Because there is no guarantee calculator would be provided to you, right? Okay. So the answer is 5,50,000. That was easy question. Now, question number 13. Which of the following is incorrect in respect of capital expenditure and the revenue expenditure? Tell me, I'm giving you 20 seconds to do that. Everyone. And for the YouTube as well, right? I'm giving you 20 seconds. Which of the following is incorrect in respect of capital expenditure and revenue expenditure? We have talked about that, right? The economic benefits of the capital expenditure are enjoyed for more than one accounting period. We have to choose incorrect option. The economic benefit of revenue expenditure are enjoyed within a particular accounting period. Capital expenditures are of non-recurring nature. Revenue expenditures are of recurring in nature. And E option says revenue expenditure eventually becomes capital expenditure. You tell me what should be the answer here. I'll wait for 5 seconds only, because I have read the options for all of you. Yes, everyone is correct. Cool. Good. So you are practicing good, and I'm really proud of you all. So I'm not going to take out names here, because Durga, Raja, Bhumija, Sid, Pooja, Yash. Okay, let me take the names for one time only. Jyoti, Vijay, Himanshu, Swigirthi, Prakhar, Deval, Akshay, Sunil, Alok, Pratik, Ashutosh, Piyushi, Suhani, Abhishek, Swagat, Vivash, iPad, Arul, Dhaval, Dev, Kulchan, Avery, Kapil, Shailendra. Okay, everyone is correct. That's cool. Very proud of you all. So yes, every other option is correct, except all revenue expenditure eventually becomes capital expenditure. No, it's not correct. All the other options are correct. So option E would be the correct answer. Cool. Question number 14. Tally software is used for what? Price determination, accounting, customer acquisition, understanding market penetration, none of the above. Tally software, very easy question. Everyone. Okay, so for the YouTube, I'm giving 20 seconds more, because there is some buffering lag of 15 seconds or 10 seconds. So I'm giving you 20 seconds to answer me this question. Tally software is used for what? Very easy question. Okay, everyone is correct. Everyone is correct. Yeah, that is used for accounting. Cool. If partnership deed, again, the out of syllabus question, but you might see. Okay, so we are preparing for it. No need to go into the in-depth portion of the partnership, but just for the understanding point of view, I have included this, so that if you find some out of the syllabus question, you might do that. If partnership deed is not there, then how the profit is distributed among partners as per the mutual understanding of the partner, as per the profit sharing ratio of the partners, as per seniority of the partners, equally distributed among the partners. None of the above. Very easy question. Just let me know in the chat section. And yes, everyone is correct. I think Bhumija, you have missed. Okay. It is saying Bhumija is correct. Okay, Bhumija, I think you have. Yeah, Bhumija is correct. Bhumija is typed. I think other persons are not giving me correct answer. Okay, I think you are giving me the previous answer. Okay, I don't know which answer you're giving me. Please write, huh? Whatever answer you're giving me, because someone is saying B, someone is saying D, huh? Okay, now I'm getting the answers. It is saying if partnership deed is not there. So if partnership deed is not there, how the profit sharing ratio will be defined? So the answer would be D. Yes, the answer would be D, not B. Please don't mistype it. Don't be confused between B and D. So if there is no partnership deed, in the partnership deed, you got the a profit sharing ratio, right? Or the loss ratio, everything is written, rate of loan taken by the partner, interest on capital, interest on drawing, everything is written in the partnership deed. If it is not there, then profit will be calculated and it will be distributed equally among the partners. Just for the understanding point of view, I have included this question, not in the syllabus, but just for the understanding point of view. If you might see a question on this, you can do that. The partner is going to open the current account when the partner has what? Again, easy question. If you have got the fixed capital, what is this fixed capital? Fixed capital means it will be fixed. Nothing will be changed here. Whatever has been invested by the partner and whatever has been permanently withdrawn by the partner, right? So if this is the capital account, debit and credit, whatever he has invested, it will be posted on the credit side. Whatever he has permanently withdrawn, that will be posted here. Apart from that, nothing will be posted in the fixed capital. But if it is fluctuating capital, then all the appropriation out of profit, appropriation means all the interest on capital to the partners, all the interest on drawing charged from the partners, all the salary paid to the partners, everything will be written here. Take, take. And if you got the fixed capital, you have to maintain the current account as well to enter the transaction that relates with the what? With the salary of partners, with the interest on drawing, with the interest on loans. So every transaction that relates to the partner that you will enter in the current account. So what the question is saying? The partner is going to open the current account when the partner has what? Fixed capital fluctuating. What should be the answer? Let me check the chat session. I have already given you enough hints. And yes. Okay, not everyone is correct. Understand the question very carefully. I'm saying when he is going to open the current account, when the partner has what? When the partner has fixed capital. Just now I have given you the answer. When the partner has fixed capital, it can't adjust the transaction related to the partners in the fixed capital. So it has to maintain the current account. So the option would be A, right? Correct, everyone? Good. Clear? Okay, let me check the chart section. Fixed. Yes, fixed would be the answer. Okay, cool. Everyone is correct. Now, bills of exchange drawn in parts. Again, not in the syllabus, but just for the understanding point of view, I have included this question. I'll give you a brief about this. Suppose this is the drawer and this is the drawee. In the one slide, this will be completed. This is the drawer and this is the drawee. He has sold some goods to this person, that is B, and B is not going to pay the money to the A right now. So after 6 months, he's going to pay this money to the A person. So what this A person is going to do? He's going to make the bill of exchange. He's going to make a document and he's going to send it to the B. And in this document, what is written in this document? In this document, it will be written that B, you are going to pay me the money after 3 months or after 6 months, whatever is the agreement, right? And B is going to accept that agreement. He's going to sign it. Suppose B is Ram. So B is going to sign it. B is going to sign this document and B is going to resend this document to the A. So drawer A will be called drawer. Why? Because he is making the bill of exchange. And this B will be called drawee because he's accepting the bill and he's going to pay the money, right? So whenever it is done in the in the sets or in the different, suppose you have the bills of exchange and when he is sending it back to the drawer, he is going to take out the photocopies of it. So then we will call it bill of exchange drawn in parts. So we'll call it bills in sets. Bills in sets. And what's the logic of that? Why the B is doing the photocopies of these bills? This was the B. Why he's doing the photocopies of the bills of exchange? When he has accepted that, he's sending it back. Why he's doing that? Can anyone give me the logic of that? Why he's doing the photocopies and he's sending the bills in sets or in parts? Why is he doing that? Can anyone give me the logic of that? Yeah, no, Jyoti. Not in the case of dishonor. See what happens when you have the, okay, I have got the more answers. Okay, not okay. Nobody has given me the logic of that. Suppose you have this foreign supplier. You have got the foreign customer. So now in the transit, na, in the transit, bill of exchange might get mutilated. It might get lost. So therefore, it is drawn in sets so that if one is lost, one is there. Right? That is the logic, basically. Simple logic. So option number A is the correct answer. Now, again, few questions. Which of the following is the first steps in accounting? Everyone should be correct in this question. Everyone. Communicating to the interested parties, analyzing, measurement of transaction, identification of economic events. Everyone. Just give what is the first step in accounting? We have done this. We have done this. Yes. Cool. Everyone is correct. Identification of economic events. Very nice. Cool. Which of the following events should be recorded in accounting? This we have done, I guess. So change in reimbursement policy, payment of salary, this we have done. Okay, so I'll give you the answer. The answer would be should be recorded. Payment of salary would be recorded for the question number 19th. And everyone is correct in this 18th question and in this 19th question as well. I am proud of you all. Again, a question. Chalo, give me the answer to this question. Which of the following is not a business transaction? Are you enjoying these MCQs and the triple R or not? Just let me know in the chat section first of all. Then I'll move ahead with the 22nd question. Are you enjoying it or not? Everyone, we have got so many people right here in the Zoom session, right? She's saying, what is leverage? This is nothing. This is not in the syllabus, leverage capital. It is part of the financial management. That is not in the course. That's why the option was given to you, Shardhan. Okay. Tell me, everyone, the answer of 20 question and 21st question. Okay, cool. Okay, that's good. That's good. I'm getting the good answers here. Right. Okay. Let's discuss the question now. Which of the following is not a business transaction? Bought furniture for the 10,000 for business. That is the business transaction. Salary is paid some fees from the personal bank account. This is not. So this is not. Okay. Question number 21. Which is the last step of the accounting as the process of information? So as the process of accounting information, we have done that. Communication is the last step. So yes, option number third would be the correct answer here. And I can see most of you are correct. Now tell me, are you enjoying this triple R or not? Are you enjoying this technique or not? First, we discussed first set of questions. Then we discussed the brief of all the underlying concept in these two chapters, the crisp notes, so that you can revise it quickly before the exam. See, you have got this you have got this a PDF, but before the exam, don't try to revise the questions, right? Just try to revise the crisp notes. So in the middle of the PPT, you will have the crisp notes, or you can save the PDF, save as, click as, save as, and select the page numbers. So you can separately save it as the crisp notes as well. You can do that, huh? ठीक, you can do that. So overall PDF will be given to you, but when you click on Control and S, na, you can select the page number, or you can select Control P to save the separate PDF only for the crisp notes. So just select the page numbers, and then you will have this separate document for the crisp notes. So when you, anytime when you need to revise it, just need to look at that separate document in which only crisp notes are there. Okay, you can do that. Merging and all the printing part. Printing means not the hard copy. I'm saying soft copy. When you click on Control P, na, you can save it. You can save certain pages of the PDF as a separate document in your computer. You can do that. Okay? I'm not going to teach you the IT here, but that you can do it on your own, right? Okay, cool. Okay, everyone is saying awesome. Okay, thank you, Sid. Ghost saying. Okay, Sharvin is saying enjoying a lot. Vaishali is saying yes. Okay, everyone is saying yes. Thank you so much, everyone. Okay, thank you so much. Chalo. Let's move ahead. Cool. Everyone has got the logic how we are going to move ahead. Okay, let's move ahead. Question number 22nd. What are the current liabilities payable? Right. Yashwardhan is saying ki, will this method will be followed in each and every subject? Yes, definitely. If you mail me, have you, if you tell me in the mail, write the subject as live class with Santosh sir and write that we have enjoyed this technique. So yes, it will be followed in each and every subject, right? Okay. Okay, cool. Let's move this. Let's move to the 22nd question. When are the current liabilities payable? Within a year, after 1 year, but within a five. That is very easy. Okay, I have also included the answers here. So you know current liabilities are within 1 year, right? Now let's move to the 23rd question. Preliminary expenses are the examples of what? Capital expenditure, capital gain, deferred revenue expenditure, revenue expenditure expense. So it is not the revenue expenditure because it is preliminary expenses, because these are the expenses which are before the incorporation and heavy expenses. And this is going to give you benefit for the more number of years. So you are not going to recognize the complete expense in a particular year. So you are going to defer it. Defer means postpone it for the future time period. And this is not relating with actual asset. You are buying it. You're not buying any actual asset. So yes, it will not be the capital expenditure because you're not buying actual asset or the physical asset or the real asset. It is not the capital gain. Yes, it is a deferred revenue expenditure. I can see most of you are correct here as well. Very good. Cool. Let's move ahead with the 24th question. Depreciation of fixed asset is an example of what? Easy question, easy question, easy question. Everyone, come on. Deferred revenue expenditure, capital gain, uh, revenue expenditure. This is easy. I'm not going to explain this question to you. This is very easy. Depreciation of fixed asset is the example. Where do you recognize the depreciation? In the PL or in the balance sheet? We are talking about only depreciation, not the fixed asset. So I have given you a shortcut. Whatever you're going to recognize in the PL, that is going to be your revenue expenditure. So option number D would be the correct answer here, and most of you are correct. Purchase of machinery. So that is very easy. Machinery, that is capital expenditure. And everyone is correct again. Question number 25th. Economic life of the enterprise is split into periodic interval. Important question. Economic life of the enterprise is split into periodic intervals. And what you do with these periodic intervals, you try to measure the performance. You try to measure the performance in these intervals. So what concept is this? Yes, it is periodicity concept. Very nice, everyone. Everyone is correct. This question we have done, right? So this is repeated. We are going to eliminate it. Revenue from sale of product is generally realized in which period? When the cash is collected. Question number 27th. Sale is made. Products are manufactured. Products are manufactured. This is repeated. Okay. Out of A, B, and C, what should be the correct answer? When you are going to recognize the sale of product as per the revenue recognition, when cash is collected or sale is made, or when products are manufactured, you tell me what should be the answer here. And yes, very good, everyone. Very good. I'm proud of you all. When the sale is made. Cool. Cool, everyone. Good, everyone. Good, 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 everyone. Good. Let's move ahead. Okay, okay. Answer number C, answer number B. Everyone is correct. Question number 28. A purchase a car for 5 lakh rupees, making a down payment of 1 lakh and signing a bill of 4 lakh that is due in 60 days. What is going to be happen due to this transaction? So 5 lakh car is going to increase in the asset side, but simultaneously you have the decrease of 1 lakh of cash here. Isn't it? 5 lakh increase in the asset for the car, but you are paying cash of 1 lakh. So overall increase of 4 lakh in the asset side. Let me write it here. But you are also signing a bill of 4 lakh. So liability is also increasing by 4 lakh, because if you are signing the bill, bills payable is a liability. So the correct option would be option number C. Asset is getting increased by 4 lakh and liability is also getting increased by 4 lakh. Very nice, everyone. I'm proud of you all. Okay. So most of you are correct. So the correct, most appropriate answer would be option number C. Question number 29. Capital brought in by the proprietor is the example of what? Tell me the answer of this question quickly. Now we have discussed the crisp note. Now you are going to give me the answer in a quick manner. Take everyone. Capital brought in by the proprietor is the example of what? Increase in asset and increase in liability. Increase in liability and decrease in asset. Increase in asset and decrease in liability. Capital brought in by the proprietor. Tell me what should be the answer here. Very easy. Increase. Let's read out the first option first of all. Increase in asset. Yes, capital cash is increasing and increase in liability. Yes, so most appropriate answer would be this, but let's read out the other option as well. Increase in liability and decrease in asset. No, because if you do that, your balance sheet will not be matched. Increase in asset and decrease in liability. No, it is not correct. So if there is an increase in asset, there should be increase in the liability to match it, to balance it. So yes, everyone is correct. Option number A would be the correct answer. Question number 30. Assets are held in the business for the purpose for what? Assets are held for what? Resale, conversion into cash, earning revenue. Tell me. Assets are held. We are talking about fixed asset. Let's write it here. Fixed assets for resales, conversion into cash, or earning revenue. What would be the most appropriate answer here? Yes, most of you are correct. Again, option number C would be the correct answer. Earning revenue, because from these fixed assets you get the benefit for the longer duration of time, for more than 1 year. Absolutely correct. Absolutely correct. Cool. Question number 31. So many questions we are discussing it for the 2 chapters. Okay. uh, if an individual asset is increased, there will be corresponding what? Now asset is increasing to balance the balance sheet. Increase of another asset? No. If you increase another asset, that is not going to balance the balance sheet. So no, it is simple mathematics. It is right. If individual asset is increased, you are going to do decrease of another asset or increase liability. Absolutely correct. If one item of asset is increasing, you have to simultaneously decrease another asset to balance the balance sheet, or you can increase the liability side. Correct. So most of you are correct. Option number B is absolutely correct in the second option, in the 31. Question number 32. Okay, this is the second set of questions we are discussing. Cost of machinery, uh, 10 lakh. Yes. Installation charges is given to you. Market value is given to you 12 lakh. But while finalizing the annual accounts, the company values the machinery at 12 lakh rupees. Okay. So they have recognized the book value or carrying amount at 12 lakhs. So they have done mistake here, because we have got some accounting concept which says that it should be done at the 11 lakh only. So which of the following concept has been violated by the Alpha Limited? Cost, matching, or accrual? Tell me the chat section, everyone. Okay, so for this question, I'm getting the answers. Correct, correct, correct. Most of you are correct. Cool. So that will be cost concept, because cost concept says at the purchase price or at the acquisition price, whatever is the total price of machinery, at that price, you are going to carry your value, right? Okay, cool. So cost concept is violated here. Kanika Enterprise follows the written down value method of depreciation. What is this written down value method? Let me tell you the brief about this. Suppose Kanika has purchased the machinery of for rupees 1 lakh rupees, and 10% depreciation is there. So she's going to charge 10,000 in the first year. Then on the next year, in the next year, she is left with 90,000 amount, because 10,000 minus depreciation 90,000. She is going to charge 10% of the 90,000. She's going to charge 10% of the 90,000, not the 1 lakh rupees. This is called a return down value method of the depreciation, right? If in the case of straight line method, then every year 10,000 would be charged. But in the written down value method, depreciation would be decreased year by year. So now in the second year, it would be 9,000. So what the question is asking to you, Kanika is doing that. She is following the same method year by year due to what? Due to comparability, due to convenience, or due to consistency concept. She is doing that due to consistency concept, and every one of you is correct. I'm proud of you all. Cool. In case of gold, very important question. UPSC has asked this question. Focus here, everyone, focus here. UPSC, EPFO has asked this question in their actual examination. In case of gold, revenue is recognized in the accounting period in which, in case of mining company, in case of gold mining companies, ठीक है? In case of gold mining companies, revenue is recognized in the accounting period in which the gold is delivered, gold is sold, or gold is mined, or it is identified to be mined. Tell me what should be the answer here. Okay, I told you, keep focus here. This was the technical question, and this, few of you are incorrect and few of you are correct. Answer would be mined, because we are not talking about any ordinary commodity. We are talking about the gold. gold is considered as the cash and cash equivalent. There is no, you can say, there is no chance that gold is not going to be sold in the market. As soon as you have mined it, you can recognize your revenue because gold has the most demand. You can sell it. It is equivalent to cash and cash equivalent. So in case of gold mining companies, revenue is recognized as soon as you have extracted the gold. Haven't you watched the Discovery? The gold miners, we got the gold miners, they extract the minerals or the gold. They get very happy whenever they have the gold. Suppose you have the gold, right? Are you going to get happy, or are you going to think that there is a risk in selling these gold? There is no risk. There is no risk in selling those gold, right? Because there is a market and there is no dearth of demand of the gold. Every time you can sell these gold. So it will be done when it is mined, not in the case of sold. It is not the ordinary commodity. Please understand this. It is not the ordinary commodity. In the case of ordinary commodity, when you sell it and when you have the right to receive payment, then you recognize it. But in the case of gold, you recognize it as soon as you have mined it. Okay, cool. In the context of accounting, what do we have as the IFRS? What do we mean by IFRS? Tell me. International Financial Reporting Standard, right? Cool. Sir, Harsha is saying, sir, please explain why not identify to mind. Because right now we have just identified the rock that we have to extract mineral from, but we are not sure if we are going to get the gold in this rock. That's why option number D is incorrect, Harsha. Good question, right? Because now there is a risk. If we fail to extract the gold, then what is going to happen? So that's why we are not recognizing at identify to be mined. Okay. International Financial Reporting Standard, the answer of this question would be option number A. That is very easy. And yes, most of you are correct. So they are the International Financial Reporting Standards or International Accounting Standards. You can also call them, right? So we have a committee which comes up with this International Financial Reporting Standards, and we have several countries which directly have adopted these IFRS or International Accounting Standards, right? They directly follow that. But in India, we have Indian Accounting Standard. We follow Indian Accounting Standard, means we have converged these International Accounting Standard with our own accounting standard. Okay. Question number 36. Which of the following accounting concept is applied by the entity when events such as new competitor is entering into the markets and rift between the production and marketing department is there, and this is not disclosed in the books of accounts? Matching, money, revenue, cost concept. What is going to be the correct answer here? What is the policy that the company is following by not recognizing these aspects of the company? Yes, answer is absolutely correct. Money, measurement. Very good, everyone. Cool. 37th question. What is the underlying accounting concept that supports no anticipation? Oh, very easy question. So conservatism. Okay, so I have got the answers from everyone. Cool, cool. Okay, okay. Very nice. Good, everyone. Everyone is correct. Everyone is correct. And that's it. Have you enjoyed the class? Have you enjoyed this technique? So we have used this technique so that you remember the underlying concept for the longer duration of time. That's why we have used this technique of triple R. The revision through the MCQs, then the briefing of all the concepts, or we can do it at the last as well. And then again, new set of questions. And in these questions, no one is wrong here. Okay, someone is asking me to repeat, Dhaval is asking me to repeat the question number 26, 36. Okay, let's do that quickly here. Good technique, Akshay Singh. Thank you very much. Okay, so now this question is saying, ki we haven't recognized any competitor that is entering into the market because you can't measure it in the monetary terms. And when there is a rift between production and marketing department in our own company, you can't measure it in the monetary terms. So what you're using here, you're using money measurement, because due to this concept only, you're not recognizing all these events in your accounts book. So which concept you are following? Money measurement. That's why the answer was money measurement. Everyone is clear? Okay, good. So did you like the session or not? Tell me, everyone, everyone, everyone. Retain, revise, retain, and the reinforce. Good technique? Yes. Everyone, tell me if you say that. Okay, everyone is saying session is great. Thank you so much, everyone. Okay, okay, okay. Thank you, thank you, thank you, thank you. Okay. Vivash is saying, in case of other cash equivalent, same. If there are cash equivalents, treatment will be same, Vivash. Okay, everyone is saying thank you. Okay, welcome everyone. So please don't forget to mail me. Huh? If you mail us, then only we will continue this. Otherwise, I will be removing this triple R. Huh? You want crisp notes for all the subjects? Yes, yes, you need this now. So you have to mail me. Okay, yes, just like we have provided you the crisp note for these two chapters, and we have discussed so many MCQs. All these things you need to have in all other subjects. You need to mail us so that management know you have lacked this session and you want it for all other subjects as well, to give you the crisp notes to revise it and plus the MCQs. Now, what's your homework? You are going to do that. You are going to uh, attempt few more MCQs on your own, just chapter wise MCQs. And at which email ID you are going to mail me? Just do it right now. I'm waiting for 3 minutes for all of you. Then I'll take doubts as well. If you have individual doubts, you can ask me whatever doubts you have. ठीक है, hello@edutap.co.in. Write the subject as write the subject as live class by Santosh sir. And please do write this triple R. You want this triple R to be followed in each and every class. You need this type of class, this type of crisp notes for every chapter, for each and every class, and how much you have enjoyed this class. Then only we will continue this. Otherwise, it will be difficult for you, right? Everyone, just make 2 to 3 statements how much you have enjoyed the class, plus this triple R, that is retain, revise, retain, and reinforcement, and about the crisp notes. About the crisp notes, I'll give you the brief about crisp notes. Just frame 2 to 3 sentences or 4 sentences, whatever you like, whatever you're going to do that on your own. That's up to you. Just do that. This is the crisp note we have got, right? So only in the 8th slide, you have completed your 2 chapters. These charts are like that. So you want these charts, your mind maps in all the subjects, do let me know in the chat section. Do let me know in the email, and write the subject as live class by Santosh. Everyone, just do that. I'm waiting for you for 2 minutes. Let me take a break of 2 minutes. Then you can ask your personal doubts as well, right? I'm giving you 2 minutes to frame the paragraph, to give me that thing. Have you liked this technique of triple R? MCQs plus crisp, crisp revision notes. Okay, I'm waiting for 2 minutes. I'm just taking a break of 2 minutes because I'm continuously speaking for 3 hours, right? I'm giving you 2 minutes. Just do that. And when you do that, after sending me the mail, write yes in the chat section. Then I will know you have done that, right? Okay, so most of you are done. Even if you haven't done that, just do that after the class. Just do that instantly so that we can just include these crisp notes and the MCQs in tomorrow's class as well, right? Tomorrow also we are going to have a class in the and it is going to be live streamed in the YouTube as well and in the Zoom as well. But after tomorrow, there will be no class in the YouTube, only Zoom session will be there, right? So whoever is on the other side, they can join the classes and through the Zoom, we will have the detailed discussion, right? And whoever has not sent you the mail, you can do that after the class, right? प्रतीक सिंह सेकंड सेट ऑफ क्वेश्चन बहुत अच्छे थे बट सर फेज 2 के यही लेवल होगा इससे ऊपर भी होगा सी वी हैव द फर्स्ट क्लास ना टुडे सो दिस chapter is easy that's why according to that the level is good but when we will be moving towards the more difficult chapters you will see more difficult questions obviously depending upon the chapters you can see the questions right okay so everyone I'm signing off. Sid is saying, okay, if you have any questions, you can ask me. And after ending the session, everyone should be sending me the mail so that I can include these crisp notes or these MCQs in tomorrow's session. I want everyone and write the subject as live class by Santosh sir. Thick, and I have provided you the email ID hello@edutap.co.in. Sid is saying, sir, I could not understand question number 16 properly. The difference between fixed, floating, and leverage capital. See, fixed capital. Okay, don't worry about that. Sid, if any concept you don't understand, below the video you have the discussion forum, right? Just type in that, and the Manan sir is going to take that doubt and he's going to explain it through the long passage, right? Okay, clear? Below the video you have the discussion forum in which you can ask multiple doubts any number of time. Okay, cool. हाँ प्रतीक ऐसे ही नोट्स हैं 10-20 पेज में कंप्लीट चैप्टर दैट्स व्हाट these notes are 10 to 20 pages you have got. For first chapter you got 5 and for the second chapter also you got 5 pages, 5 slides. In the 10 slide 2 chapters are complete. So these notes I'm going to provide you for each and every class provided you mail me that did you like these crisp notes and these revision sessions or not. Okay, I'm signing off. Everyone must send me the email so that I can implement this in the next class. Okay, chalo. Good night everyone, take care. Let's meet tomorrow at the same